a lot of our biggest issues just by like making new solutions that are better. I believe that there's no such thing as a good idea or a bad idea because nothing's that definitive. I don't think ideas live on a spectrum so binary between good and bad.
Almost at exactly the same time that we are flying to LA to meet with Pharrell to figure out ComplexCon 1, Rich is concurrently negotiating the sale of Complex to Verizon and Hearst.
Yeah.
And I have to ask, the deal gets done. We all exit for $300+ million, reportedly, according to the Wall Street Journal. And you've talked about the shame that you experienced at the end of Echo and having to deal with that going bust in a certain way. What was the sort of emotional payoff for you to then, 6 years later, put this tremendous W on the board?
Well, it felt great. I don't feel like Echo was the Echo business, how it landed, the plane landed, was something to feel shame for. The shame-inducing feelings have less to do about my ego as much as it was the disappointment with my friends and the people I loved and my colleagues and feeling like I could have done better by the people that worked so hard for me.
I was gonna say, on the flip side, I mean, with Complex, you did quite the opposite, and...
that was gratifying. We could all win together, and it was a better distribution of risk and a better distribution of upside. There is something really powerful in the incredible feat of getting humans to organize, to do something together, and to do it against a plan. And it's like one of the most gratifying things.
After Complex sells, both of us stick around for about a year and a half until the fall of 2017 and end up going our separate ways. I mean, I went to an adjacent space at Def Jam. You went in a completely different direction, going to work at an NGO, XQ, and the Emerson Collective, Lorraine Powell Jobs' institution. What inspired you to go in that direction, and tell me, what do you do for them?
One of the many sort of domains of interest and pursuit for me has been philanthropy, and specifically the educational space, the high school space. I have actually a history being in the space amongst ed reformers.
The corporal punishment initiatives.
I funded lawsuits against states that were allowing corporal punishment, physical restraint in schools, and I had some success. So the corporal punishment initiative is how I ended up getting to meet the woman who was the Undersecretary of Education in the Office of Civil Rights, Ruslan Ali. Ruslan went on to become the CEO of XQ. So I found myself in DC nerding out on this and like really leaning into it, and became really friendly with Ruslan. And so I felt very lucky when she was launching XQ. She asked me to join the board at the XQ Institute, which is effectively a high school redesign initiative. We launched with 20 or so schools that are all informed by a certain set of design principles. And we're really trying to make redesign open source and practical and available to districts and states. And, you know, and contrary to popular opinion, like if you want to see something anew, you know, just because the system, you feel the weight of the system and you convince yourself that you can't, you actually can. And just believing that you can makes the difference. Being able to bring folks from outside of philanthropy to philanthropy has been one of the most professionally challenging and gratifying things I've ever done. And to realize I spent most of my career about like myself, my own sense of authorship, my own like me, and like seeing the power of we. It's why I went to join Ruslan, and very generously, like Lorene offered me to join. I was so eager because their vision was clear. And you know, I'm proud to say that through the years that we've been there, we're now in partnership with the Carnegie Foundation themselves, with them saying what we've been waving the flag on. So So it's a very exciting time professionally. It's maybe not as it's not as sort of much public fanfare, but I think it's as meaningful as anything I've done.
You've built two businesses that have reached ubiquity. You've raised children to adulthood. Yeah. You're now in the middle of your third act, giving back.
Yeah.
If you were to sit with a 21-year-old creative entrepreneur, and you had 45 seconds, as we do in this moment, to impart some wisdom on them, what would that be?
Be curious. Don't let school get in the way of your education. You have to be a lifelong learner. Know that you're not alone in every way, right? Collaborating is powerful, right? Working with a team, distributing the decision-making power, being part of that orchestra, that thinking orchestra of problem solving. Man, that's when the shit's at its best.
Put that vision out there that actually happened the way I wanted it to.
You're at the end of the earth, and it's freaking cold.
A cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead, the magic carpet. An example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port destinations.
Functional.
Exactly, value fractional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take
How
to
about the Instagram? Can you about that?
I can imagine.
Instagram moment with the sunset, having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Nosotros somos una pequeña partecita del mundo, pero estamos aportando muchísimo más que otros países, siendo Bogotá desde el año pasado pionera a nivel mundial de la electrificación del transporte. Ahí es donde nace La Rolita, como un operador distrital de transporte. aumentando el número de vehículos eléctricos para la ciudad de Bogotá. Por cada bus eléctrico es como si sembráramos 2.300 árboles al mundo. Somos muy pocas las mujeres que en Colombia trabajamos con el sector de transporte y mucho más haciendo este tipo de labores. Hoy día trabajamos 547 personas, de las cuales el 47% son mujeres. Mantenimiento, administrativos y operadoras.
Pues la importancia de las mujeres en el sistema de transporte acá en Bogotá, Colombia, para mí ha sido muy importante porque se quita todo el estereotipo de que el que maneja un bus tiene que ser un hombre, y la verdad es una oportunidad para muchas, porque, o sea, a pesar de todo, dependíamos como de nuestras parejas, de lo que la sociedad dijera, de lo que la sociedad quería. Yo sufrí mucho para poder manejar taxi, pues porque era mujer. Entonces, para muchas de nosotras, esto ha sido un salvavidas. Sí, yo me siento que ya ocupo como un lugar más importante en la sociedad, que sí sirvo para algo y lo que desempeño es algo muy importante.
Queremos ser diferentes, queremos estar por encima del 50% de mujeres trabajando aquí en La Rolita. Las mujeres son muy cuidadosas, ellas se caracterizan por ayudar a la gente, por saludar, por dar un servicio totalmente diferente al que está acostumbrado el Bogotá. Ciudad Bolívar es una zona que aquí venía la ilegalidad, mototaxi o buses que no pagaban sus seguros. Llega La Rolita, le cambia totalmente el ambiente a este sector. Aquí salen 3 rutas y otras 5 rutas salen fuera de acá y pueden iniciar en otros puntos diferentes de Ciudad Bolívar. Hay solo una ruta que está iniciando que no está en Ciudad Bolívar. Nosotros sí, por contrato, debemos certificar que nuestra energía también es limpia. Supera muchísimo más en toneladas de CO2 que nosotros dejamos de impartir para el mundo. Desde aquí, desde La Rolita, ya tenemos un componente sostenible y ambiental para la ciudad y yo creo que para el mundo.
At some point you had to fight for the trademark, right, for the Red Sol.
Yeah.
Was that stressful?
Very stressful. Very stressful. Especially, you know, we are a small company in a way, and to have to fight people who have those huge companies who put you 27 lawyers on your back for something which is yours is very stressful. I mean, I wish I wish it didn't happen. Everything which happened to me is a lesson in a way, bad or good, and once it's done, and you're sort of happy. I mean, I'm happy about it. That thing I could have definitely avoided, but it's done.
Did you realize at the time when you started the company that you would become so successful and actually so big?
No. You know, when I started the company, I wanted to have a shop in Paris, which is my hometown, and I wanted to do pretty shoes for pretty girls. That was my goal.
And now you look back and you say, actually, I still make pretty shoes, but for many more women.
Yeah, absolutely.
Do you think you would have been so successful without the Red Sol?
I think the Red Sol definitely, of course, participates to my work, but also to the fame of my shoes because it's instantly recognizable. But then, you know, the design is very important. But definitely, when you have such a strong sign of recognition, it participates to, yeah.
Hi, I'm Francine Lacroix. Join me on Leaders with Lacroix as we explore what drives the most influential people on the planet, with guests like U.S. Special Presidential Envoy for Climate Change, John Kerry.
Climate has no affiliation with any party or ideology. Listen to the scientists. This is not a matter of ideology. It's not a matter of politics. That's the challenge.
Leaders with Lacroix on Bloomberg Television, TV Go, and Bloomberg.com.
Back in 1997, I was interested in the following question, which is there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip. A bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
I think the way they got a date was to impress the females by making loud booms.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Drones hit Moscow, lower numbers hit China, and Washington works hard not to hit the debt ceiling. This is Bloomberg Wall Street Week. I'm David Weston. This week, special contributor Larry Summers of Harvard on the stubbornly strong labor market and what it means for inflation.
There's something about the underlying strength of the economy that they're missing.
And former IBM CEO Sam Palmisano on just how big generative AI could get and what could stop it.
You need some kind of a cognition capability, which it does not have.
Global Wall Street started the week watching drone hits in Moscow, perhaps as a precursor to a counteroffensive in Ukraine.
We're able to reach you right in the heart of Russia, and these attacks are really about sort of like sending that message. So it's quite embarrassing for Russia that this is happening.
We spent another week on the debt ceiling in Washington, but this time it wasn't about getting a deal, but about getting it all behind us, at least for a couple of years.
We're going to deal with the debt ceiling. I think things are going as planned.
Tonight, we all made history, because this is the biggest cut and savings this Congress has ever voted for.
And as expected, not everyone was happy.
Not one Republican should vote for this deal. Not one.
China got some bad economic news, raising more questions about the speed of its recovery.
China's manufacturing activity contracted for a second straight month in May. It's more evidence that the post-COVID recovery has slowed in the world's second largest economy.
But here in the United States, the jobs machine, well, it just kept on going, adding 339,000 new jobs in the month of May. That was way more than the 195,000 that was estimated, while unemployment actually rose, up from 3.4% to 3.7%, which set the markets off to the races, with the S&P 500 up 1.83% for the week, almost all of it on Friday alone. The NASDAQ was up a bit more, adding 2.04% for the week, while the bond markets almost did a round trip, starting the week just under 3.8% on the 10-year yield, dipping well below 3.6% at one point, and then coming back to just under 3.7% on Friday as people returned to thinking about possible rate hikes. To take us through the week in the markets, welcome now Barbara Reinhardt. She's Voya Capital Head of Asset Allocation, and Aaron Brown, PIMCO Multi-Asset Strategy Portfolio Manager. So welcome back to both of you. Great to have you here. Barbara, let me start with you about what we're seeing in the markets. We saw some numbers on Friday that indicate the economy overall looks pretty strong, at least when it comes to jobs. How are the markets reacting to all this information?
It was a strange employment report, right? So it didn't coincide with necessarily some of the other data that we're looking at, such as NFIB, hiring intentions, the home-based data. They would have told you that the labor market would have been a lot weaker than the number that we had printed today. But the good news is, and that what the equity market held on to, is the gentle decline in average hourly earnings. And that is good news on the inflation side, because you've had very sticky inflation. It's been coming down, but coming down probably slower than what people expected. But to see the easing in the wage data is a very good positive development.
So, Aaron, it raises necessarily the question, what is the Fed going to do? Does the Fed say, boy, that's an awful lot of jobs, therefore we're going to have to raise again? Or can they pause or skip, or whatever they're calling it these days, the way they've been telegraphing?
It certainly throws a wrench, certainly into how the Fed's thinking about the evolution of the economy. And, just earlier this week, there were comments on the tape from various Fed governors, Powell included, that were hinting at a potential pause at the upcoming FOMC meeting. And certainly the timing of this release is inconvenient. That said, I wouldn't get too hung up on whether or not the Fed hikes one additional time or not. Most likely they will pause at this upcoming meeting, but do a hawkish pause, meaning, they'll talk about the potential for further rate hikes down the line if the data doesn't evolve the way that they're hoping it will. But I think what is important to keep in mind, at least from an investor perspective, is whether or not they hike one additional time or not, it really doesn't matter in the grand scheme of things. The lagged effects of monetary policy is really what's going to matter. The significant amount of tightening that happened last year still needs to work its way through the system and still will continue to tighten financial conditions for the market and for the economy overall. And that's the bigger picture of what's going on right now and what's ultimately going to, potentially affect the economy and lead to a further slowdown from here.
Barbara, we've heard an awful lot about this lag in the effects from monetary policy. How long a lag should we expect? Because, boy, it doesn't seem to be showing up very profoundly so far.
So it tends to be about, when the Federal Reserve started hiking interest rates, it was about 14 months ago. There tends to be a lag of about 24 months between when the Fed starts hiking and when you start to see a dramatic slowdown in inflation. That means we should have at least the rest of this year into the first quarter of 24 before you start to see a significant slowdown in inflation. Look, when you look at things like the sticky price CPI or the underlying inflation gauge, they were at, between 6 and 7% just 6 months ago. They're down now to about 3.5 to 4.5%. Well above the Fed's target, but they're going in the right direction. In order to get down to the 2% on inflation, which is the Fed's target, you likely need to see a little bit more time go by. Think about this, David. The real issue is that the Fed hikes, the 75 basis points that they did over the course of 3 or 4 meetings last year, they happened in the third and fourth quarters of last year. You need at least 12 months for that to start to be felt by the economy and start to see the slowdown. You're seeing it in some of the data change indexes. You're starting to see some slowing. Certainly not indicative of the labor market this morning on that report, but I would say that data can change and can change relatively quickly. So I would think that you've got more slowing coming ahead of you, even if the Fed did nothing going forward.
Aaron, when you talk about data changing quickly, I'm going to make a shift here over to AI and tech. Well, we've seen a big change quickly in that. How much of this is a tale of two very different equity markets, one of which is a relatively narrow tech, big tech, driven by AI, and the rest of the market going a different direction?
I think you're exactly right. I mean, the market breadth or the leadership has been incredibly narrow for the S&P 500 this year. In fact, if you look at just the equal weighted S&P 500, it's actually down on the year, yet tech has had a stellar performance. A lot of that is off of very weak performance last year, but certainly AI and automation has gotten the markets excited about future growth prospects for the tech sector. And this is another avenue of growth. Keep in mind, even for NVIDIA, which is one of the leading, semiconductor manufacturers and designers rather, and certainly has a leadership role with respect to AI, it's an incredibly small percentage of current sales. And so really what you're betting on within the tech sector right now is future growth. This is secular growth for the tech sector, not something that's really going to turn up materially in earnings over the next several quarters. And so I think that the market has gotten excited about this theme, but it's probably a little bit ahead of itself in terms of price action, just given the fact it's not going to materialize in earnings anytime soon. That said, I think that the market this year came in looking for, opportunities to buy, to bottom pick underperformers last year. And you've seen it with the tech sector, you've seen it with the retailers, you've seen it, across the board. But these are really more idiosyncratic rather than, the market breadth overall, which has been narrow. And so that to me is telling me that, potentially the market's getting a little bit tired. And potentially we may be in for tougher days ahead as leadership, starts to narrow. That tends to not be, the greatest environment rather for the average investor.
Okay, just to check in on the Bloomberg elves, in case you're following this, the Bloomberg elves have a year-end median of 4,000. We're well above that now at the end of this week. Although we did have one elf, actually, Laura Calvasina of RBC Capital Markets, who took her estimate up to 4,250, which is closer to where we are. So we'll keep praising the elves on how they're doing on their predictions. In the meantime, Barbara Reinhardt and Aaron Brown will be staying with us as we consider what is going on with the T-bill market in the aftermath of that debt crisis. That's coming up next on Wall Street Week on Bloomberg.
In Big Ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
This is Wall Street Week. I'm David Weston. It's not just U.S. investors who drive U.S. markets. We also pay attention to foreign investors in U.S. securities. And Torsten Slok of Apollo is here with one of his charts to show where foreign investors are putting their money.
So before the pandemic, there was appetite among foreigners for buying, in particular, U.S. government bonds and also U.S. equities. Foreigners have also historically bought a lot of U.S. credit, but broadly speaking, the trends were that foreigners had appetite for buying both U.S. fixed income and buying U.S. equities. So over the months ahead, we still have that the Federal Reserve is doing quantitative tightening to the tune of roughly $60 billion every single month. At the same time, we also have a budget deficit, which is roughly around 5% of GDP, and that amounts to roughly, in round numbers, about $100 billion in issuance of treasuries every single month. Combining both QT and the budget deficit with this new issuance on the other side of this debt ceiling deal now potentially being quite substantial, it does raise questions about who is it that will be buying treasuries, in particular in an environment where the hedging costs for foreigners continue to be quite elevated.
Aaron Brown of PIMCO and Barbara Reinhardt of Voya are still with us. So Aaron, let me start with you here. We've been following this after the debt ceiling got put behind us, as fortunately it did this week. There's the question of replenishing the larder, essentially, in the U.S. Treasury to get their stock back up. It's going to be a lot of T-bills. Do we have the buyers for those T-bills?
As Torsten mentioned, I mean, the challenge is from a foreigner's perspective. If you're a Japanese investor and you're looking to buy 10-year government bonds, after the FX hedging cost, measured by the sort of 3-month, FX forward hedge, it will cost you -2%. Your yield that you're getting is about -2.2% on a 10-year bond. You can buy JGBs for about 40 basis points. So from a foreigner's perspective, it's better to buy the local bonds than to take into account the FX hedging costs and buy a U.S. Treasury bond, even though U.S. Treasuries, at least from a a yield perspective in the US is yielding more. So it's really unattractive right now just because of FX hedging costs to buy US government bonds from a foreigner's perspective. There's another a wrinkle that I'm going to throw into, the challenge that we have with respect to supply. Not only do we need to refill the coffers of the TGA, and we have to fund the fiscal deficit, but also keep in mind from an international perspective, you're going to start to have the TLTROs also that are going to start adding to additional supply in Europe as well. So you have a lot of government supply that's going to be hitting the market in the second half of this year, which is going to create a challenge, certainly in terms of, or raise the question in terms of who's going to be the incremental buyer for that. The problem with the debt ceiling being passed, I mean, it's good from a political perspective and good from a stability perspective, but it does mean that you now have to refill those coffers. There's going to be a significant amount of issuance over the next couple of months, and the Treasury is saying that they want to rebuild to about $600 billion that TGA, which means a significant amount of issuance over the next 3 to 4 months.
So, Barbara, I must confess, I hadn't thought about the TLTRO issue, but whatever it is, what's it going to do to liquidity in the marketplace, and what could that mean as a practical matter? That money's got to come from someplace.
It does, but a lot of times you're talking about cash buyers moving over to a different cash instrument. In the past 20 years, there have been 4 times that the Treasury General Account has had to raise significant amount of assets, like it is this time. Each time it was able to do it without an issue. We don't rule out that something could potentially be amiss this time and cause some indigestion, but the Fed is very well versed in the plumbing of the Treasury market, and we don't think that it's necessarily going to be a very big issue for the front-end market. Plus, also think about this. You're now getting interest rates that are almost in excess of headline inflation to be parked in T-bills, right? So it's just a very attractive investment for many investors, and many of the bank depositors are looking at the T-bill market thinking, I can go over to money markets and get much better rates of interest. So I think there's going to be a lot of natural buyers.
What does that mean potentially for the banks, actually, for their capacity to lend, Barbara? Because that sounds good from the depositor's point of view, but what if from the bank's point of view? They may not have as much to lend.
I don't think that JP Morgan's going to have a problem with that. Not speaking about a company very specifically, but I do think that, look, the smaller regional banks do have the issue with commercial real estate and with local lending. That's a little bit of a different story, but those are not your big money market. Those are not your big money market buyers. Your big buyers that are coming from the significant amount of deposits that are in the major money center banks, I don't think you're going to have an issue with it. The TGA should be able to be refunded with very little problems in the market.
Erin, I interrupted you.
No. So I take a slightly different approach. I think that there's 2 ways or 2 liabilities that need to adjust lower as the TGA gets rebuilt. The first is through the reverse repo facility. Now, as Barbara said, if you had TGA rebuild be very cleanly met with a reverse repo offset. So as TGA goes up, reverse repos go down, then that should have no impact on liquidity. However, I do think that restrictions are going to emerge, particularly because right now the banks or money markets are getting a really good deal by parking the money at the Fed. They're getting 5 basis points over the 5% level, so they're getting about 5.05%. Right now, Treasury bills have been trading below that. So that means that to make it attractive for money markets to move over into buying bills, you're going to have to see bills go up in yield. The second is that with respect to bank reserves, as reserves leave the system, that does put, that generally means that deposits are leaving banks, and that generally means that it hurts credit creation in the general economy. So I actually think it's going to be a bigger impact on liquidity.
Something that has been an issue. Thank you so very much to Barbara Reinhart of Voya Capital and Erin Brown of PIMCO. Now, this week, we mark the 100th birthday of Henry Kissinger, the man who laid the foundation for the most important economic relationship in the world. That was, of course, the one between the United States and China. So we went back and found an interview Dr. Kissinger did with Louis Rukeyser back in 1990, when China's GDP was a mere $360 billion compared to the $18 trillion that it is today.
Do you think we still have important economic opportunities in China?
I think we do, and I'm in favor of maintaining a working relationship with China It is too important a country. It have made good progress in economic reform, and I think we should not lightly sacrifice a relationship with the country with the longest continuing history in Asia, with the cultural influence that it has.
This is Wall Street Week on Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Wall Street Week. I'm David Weston. Investing that takes into account environmental, social, and governance issues has been all the rage, with Bloomberg estimating that ESG funds will reach over $50 trillion worldwide by 2025. But the issue has become increasingly politicized in the United States, in sharp contrast with Europe and with Canada. To explain that gap and where it could take us, we welcome now Eileen O'Connor, Rockefeller Foundation's Senior Vice President for Strategic Communications and Policy. So Eileen, thank you so much for joining us. You talk to a lot of the big institutional investors, things like pension plans in Europe and the United States, as well as the fund managers that invest their funds. What are you hearing in terms of a divergence, possible divergence between Europe and the United States?
Well, there's incredible frustration of U.S. pension funds because they understand that this is actually bad for business and particularly bad for their investors. And we're already seeing that in some conservative states where there's proposed anti-ESG legislation, some of those even Republican pension fund managers are pushing back and saying that it's going to cost their pensioners billions of dollars, both in fees to convert and to pull out of investments, but also in losses over the next few years. And the reason for this is that if the United States businesses don't start investing in the technologies that are going to abate greenhouse gas emissions and also adapt to a warming climate, we are going to be losing out as a country and as an economy because Europe and Asia, and particularly China, are investing in these technologies because they understand that climate change is very real, that human activity and fossil fuels are major causes, as well as some of the ways we grow our food and use other technologies. And so they are now already converting their energy systems. They are investing in battery storage, electric vehicles, electric stoves, and other things. And the United States business, if there is a chilling effect by this anti-ESG legislation, it's business that's going to lose out, and also consumers and the economy in general.
Before you even get to the investments, you can talk to just about talking about it, because we're having difficulty sometimes getting people even to come on and talk about the issue because it's so politicized. And there's actually partisan politics going on with people's houses. They're sending up picket lines at people's houses. Are you having a difficult time getting even people to discuss it publicly?
Yes, businesses. I mean, I have been, I'm also was a corporate lawyer, and I've been speaking to some of my former partners who are representing companies and who are basically afraid to talk about the fact that these investments are good investments. I mean, over the years, investing in new technologies has driven down the cost of solar and is driving down the cost of battery storage. These are very good investments, and they will actually lead to economic growth. The other thing is these businesses know that they have to also, they have to address climate change because they have to address the risk of climate change. We already know that even this year alone, we've had $7 billion climate weather events. That's what NOAA calls them. They actually caused over $1 billion worth of loss and damage to businesses and to people in the United States. And those instances are rising tremendously over the last few years. And so that is another thing that businesses want to do. They want to make profit, but they want to avoid cost, obviously. And so that's a risk that they are also looking at. And I would also say that, interestingly, Norway's sovereign wealth fund is really taking that risk seriously. They're basically saying that they're not going to invest in companies that don't take mitigation of climate risk into account when they're making investments. They will actually disinvest from those companies, is what they're saying in a statement.
Eileen, when we talk about ESG, I'll plead guilty to this. Often I think about the E, the environmental, some of the climate issues you just talked about, but there is an S and a G as well. And it does strike me that one of the issues that is really involved here, and again, it's become very political, is diversity, equity, and inclusion. To what extent are we having difficulty taking that into account in talking about, in making investments?
Well, that too has become incredibly politicized in what's known as these culture wars. And again, too, DEI and training on DEI, and there's a lot of legislation that says, we don't want business to invest in diversity, equity, and inclusion, in hiring diverse people, arguing that it's actually bad for business, that they're less qualified, and also not to invest in leadership training, inclusive leadership training, that is a cost that they should avoid. That's actually also counterfactual, because the facts show that when you have a diverse workforce with inclusive leadership that listens to those employees, that takes into account their views, you actually add value to the company. You actually create better outcomes on decisions because of the diverse viewpoints of those people. So again, that's another thing that is really counter to the facts. So the argument that that's bad for business is actually not true. In fact, DEI and inclusive leadership training is very good for business.
So finally, Eileen, I want to go back to your day job. What are you doing at Rockefeller Foundation to address these issues?
Well, we're actually using, one of the problems we have in addressing climate change, there is a huge capital gap in what's needed from public funding, philanthropic funding, and private funding in enabling countries, particularly in developing markets, to transition to sustainable energy systems. And unless we actually can decommission coal plants in some of these developing economies like South Africa, India, Vietnam, and Indonesia, we're never going to keep the warming of the climate below 2 degrees Celsius. And above 2 degrees Celsius, it's really catastrophic effects.
I mean, it's really great to talk to you. Thank you so much. I suspect it's not the last time we'll have an opportunity to talk about this. That's Eileen O'Connor of the Rockefeller Foundation. Coming up, how big could generative AI get? And could it really lead to mass extinction? We ask former IBM head Sam Palmisano.
This technology makes you feel like you're actually getting something that's correct, right? But it's not.
That's next on Wall Street Week on Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
DOJ or other authorities
could face bigger challenges.
Next. Fed was going to keep rating World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
Artificial intelligence. It's been with us for longer than we think. Bank of America's Brian Moynihan says they've been using it for at least 5 years.
We have this thing called Erica, which is a virtual artificial intelligence, virtual assistant, natural language processing, predictive technology that we've been running for 4 or 5 years.
And people like JP Morgan's Jamie Dimon insist that it is transformational.
AI is real. This is not crypto. That's not crypto. This is a technology which is staggering.
With AI pioneer Samuel Altman telling Congress,
we think it can be a printing press moment. We have to work together to make it so.
But now there are those who are warning about some of the downsides, with tech veterans like Carly Fiorina agreeing with OpenAI's Samuel Altman that there needs to be regulation.
Big tech has to say, we alone are not in charge, and we alone cannot control this.
And a group of AI industry leaders this week wrote an open letter warning that what they are building could lead to a risk of extinction. And to take us through some of the possible impediments to generative AI, as well as the risks involved, welcome now Sam Palmisano. He is now the chairman of the Center for Global Enterprise, but of course, for many years, he was the chair and CEO of IBM. So Sam, welcome back to Wall Street Week. Really great to have you here. Let's start, first of all, with exactly how big this generative AI could be. We've seen NVIDIA this week really explode in its market capitalization. Is it overhyped, do you think? Is it as big as people say?
David, well, first of all, thank you for having me. No, I think it's that big. This is transformational technology, but it's early stage. But I mean, I always draw the analogy to the internet, because if you think back where it began, exchanging technical documents around the world in the 70s to what it's become today, 50 years later, a lot had happened in innovation and development and regulation and guidance, etc. All that has to happen with generative AI or large language models. But it is that transformational, because like the browser for the internet made it kind of user-friendly for people to actually get in there and look up information or search. This will do the same thing as far as AI is concerned, for people to use natural language to interface to it and get responses that are very much like human being responses.
So if it is transformational, as you say, what are we going to need to have it be that transformational? What are some of the key inputs? Let's start, for example, with microchips. That's what's driving NVIDIA to a large degree, and maybe some other chip manufacturers as well. What is the need there?
Well, basically, this is going to be, it requires massive infrastructure. And today you think about it as hyperscalers is the term, or cloud computing service providers like Amazon, Google, Microsoft, etc. Having said that, this is huge demands on capacity and performance of that capacity. Therefore, the chips, and the advantage that NVIDIA has is these things, graphical processing units that are called GPUs. Those technologies themselves are much better performers than the classic Intel chip, which is referred to as x86 technology. So fundamentally, you need that level of performance to run this, like these natural language models, because they're so large, the data sets are so large and require so many interconnections that you need the performance to be acceptable to the end user.
One of the things we hear about is energy also. It didn't seem that long ago that we were talking about crypto mining and what a big drain that was for energy. In fact, China really cut back on some of the mining there in China. What is the demand potentially in this transformational generative AI or LLM? What is the demand for energy?
Oh, it's the same as all these large cloud service data centers. I mean, it's massive. I mean, you could model those as if they're nuclear reactors. That's how much energy they consume. Now, there's a lot that can be done. I mean, quite honestly, around the utilization of this infrastructure to cut the energy costs. There's ways you can use green energy to supplement the classical forms of electricity and those sorts of things. But there are lots of techniques associated with how to reduce that. But energy is going to be significant. There's no doubt about it. It already is. I mean, it has been for years in these large, whether they were supercomputers in the old days or now the cloud infrastructure providers, it's the same issue. They require significant amounts of energy.
So, Sam, we've heard an awful lot about the wonderful things that generative AI could bring us, not least of which is increased productivity. There are remarkable projections here of trillions of dollars of increased production because of generative AI. Then we had a letter that came out this week from a group of AI experts, people who should know about this, warning about the risks and even saying there's a risk of extinction if we're not careful. Is that overblown?
Well, okay, let me tell you what the risks are. I don't know if it's extinction, but the risks are, quite honestly, this technology makes you feel like you're actually getting something that's correct, right? But it's not. It's not valid. And what it's doing basically at the engineering design is connecting large-scale words together. But there's no checking to the source of the words. There's no fact-checking as to conclusions these words reach. In some cases, it's a terrific essay that it's prepared. Maybe it's a great book that it's written or a wonderful poem. But at the end of the day, if you need accuracy, and you have to have accuracy, like in healthcare, if you were depending upon your diagnostics, you would not use ChatGPT. I mean, you'd want to have a doctor or some human of some kind that looked at the conclusion that it reached, even though it probably read all the medical journals like we did in Watson Health. You need some kind of cognition capability, which it does not have. I think people get confused by what it does have because it's so easy to use. It's very, very attractive. There's no doubt about it. But it needs to be enhanced with some of these capabilities that will address the concerns that are in that article today about worrying about it could be like nuclear warfare in the future. I mean, if you think about applications that could have a short-term impact, that you would like to have facts but don't have any facts, take political propaganda as an example of that, or political campaigns. I mean, you'd like to have some facts and all that information, but we all know they don't exist. And I'm not sure that the proponents of all that information really want the facts out there anyway.
Sam, is that risk, is that weakness about actually truth checking, is that inherent in large language models? Is it inherent in generative AI? Or is it something with new iterations actually it could take over itself so it could actually check itself?
What needs to be done is the self-checking, like you said. That does not exist today. I make the argument that the inventors of this technology that are raising all these alarms knew about these alarms, and they could have written some of these checkers, these tracing of the information or transparency of the data into the actual technology itself. Now, however, I understand that they raise the concerns. They are very, very valid concerns. However, if you are the inventor or the guys coming up with this technology, you knew this and you could have prepared for this. But now it has to be done. I mean, it's great technology, it's transformational, but now it has to be done, and it will be done. And there's going to be lots of small, innovative companies that are going to take advantage of that gap and add that capability.
What's the government to do?
It depends, right? This is a great dilemma. And I take you back to the early days of the internet. I mean, in the early days of the internet, the government decided to take a light hand of guidance to the internet. And the reason being that they would like to see the innovation grow and accelerate before they actually put the regulations in place. And they're still trying to do that today as you look at data privacy and those kinds of issues, which are very, very valid issues. And this is the same thing. I think in the beginning, how do you regulate something that you don't know what it is? And we really don't know. We have concerns about what it could be, but that's not what it is today. So my suggestion to the people that are raising all these concerns is they work with, obviously, the technologists, the private sector, the academic universities, government regulations, and come up with guardrails, not regulations. Because once you put this in law or code, it never gets reversed. And I don't think we know enough today to put that in a responsible way, put that in place. I know some of the founders of the technology are calling for that. I understand why they're raising those concerns. However, it's the actual details that matter in this case. And you're trading off innovation because you could solve massive societal problems with this technology. I mean, just think about where we have inadequacies of consistency of quality. Healthcare is a system that doesn't have consistency of quality. Suppose you made everybody an expert in healthcare, how much better we all would be. Education, how much better we all would be. So there's great benefit in the technology. I just think that we ought to approach it in maybe a little more heavier hand than the internet, but certainly not a heavy-handed regulation that perhaps is existing today in China.
Okay, Sam, it's always such a pleasure to have you here on Wall Street Week. That's Sam Palmisano. He is now the chairman of the Center for Global Enterprise. Coming up, we wrap up the week with our special contributor, Larry Summers of Harvard. That's next on Wall Street Week on Bloomberg.
So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance. Our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
This is Wall Street Week. I'm David Weston, and we're joined once again by a very special contributor here. He is Larry Summers of Harvard. So, Larry, we have to start with those jobs numbers that came out on Friday. A lot more than expected, 339,000 jobs. At the same time, we also had an increase in wages, and we had an increase in unemployment. What do you make of this surprise number, I think, for most people?
Look, I think these are strong numbers in toto. 339,000 jobs is a lot. There were upward revisions for the previous 2 months. We've always known that the monthly unemployment rate is a very noisy series. That's especially true in May when you got all the seasonal adjustments going on with respect to the kids who are leaving school and looking for summer jobs. So I think you have to read this report as strong. I think the forecasting community's got to do a little soul searching. They've been low on this report for 14 months in a row. That has got to suggest that there's something about the underlying strength of the economy that they're missing. Or another way to put it is that they are exaggerating the impact and efficacy of monetary policy in slowing the economy down. So I read these as a strong report, and I think the general tendency of the data has been very much towards saying that the economy, at least for this while, has a fair amount of robustness in it.
Going beyond the jobs numbers out this week, the other big development with the economy, I dare say, is that package that did make it through, actually, the Congress, that took care of the debt ceiling problem. I wonder what you make of that package, and maybe more specifically, what it means for the fiscal policy of the United States of America.
David, before I say something about the debt limit issues, I want to just say that with that behind us, with these employment figures, with the general evidence of robustness in the economy, I think the lower risk strategy is for the Fed to raise rates in June. It's a close call, and if they don't raise rates in June, I think they have to be open to the possibility that they may have to raise rates by 50 basis points in July if the economy continues to stay way hot and if inflation figures are robust. I saw that some of the governors have been saying that maybe the Fed can move to a mode of raising rates by 25 basis points only every other meeting. It's certainly possible that that's a mode that they can move into, but for there to be any sense of commitment to that, given the risks, would, I think, be repeating the kind of mistakes that the Fed has made repeatedly over the last several years. I vacillated after the first run of serious banking issues, but seeing where we are now, seeing the general picture in markets, I think we're again in a situation where the risks of overheating the economy are the primary risks that the Fed needs to be mindful of. And of course, that's just reinforced by the fact that we've put the debt limit and the potential loss of confidence from it very much behind us by reaching this deal. Look, the thing I'm worried about coming out of this deal is not what happens in the near term. The IRS provisions there, I think, are really a serious error, and we're missing a chance to catch lots of people who have just cheated on their taxes, who are going to go undiscovered, and because we're not investing enough, we're going to probably have even more people playing the audit lottery, and that's a mistake, a serious mistake. But I think the really big issue that focus is going to need to turn to is the long-run fiscal picture of the country. CBO says that we're headed to a projected deficit more than twice as large as the one we had when we set off the Simpson-Bowles process, more than 75% larger than the one that was there when Bill Clinton came in as president. And there are all sorts of reasons to think that the CBO estimate is way optimistic. I don't believe for a moment that 3-month Treasury bill rates are going to average 2.3% over the next decade. I don't believe for a moment that defense spending as a share of GDP is going to fall by 20% over the next decade. If anybody believes that 100% of the Trump tax cuts are going to be terminated when they come up for renewal in 2025, I'd be happy to make them a bet, or even happier to sell them a bridge, because they're very gullible. So I think if you look at the numbers in the right, serious way, you're looking at projected budget deficit that could approach or exceed 10% of GDP.
Well, that's fascinating, Larry, because I don't want to say you're sounding a little bit like Kevin McCarthy, but you are concerned about the deficit and the debt. Let me talk to you about how we should look at that problem. You just talked about the ratio of the debt to the GDP. You wrote a paper with Jason Furman a few years back saying it really is the question of the size of the debt service against GDP. There's a report in Bloomberg this week that said that's what Janet Yellen, the Treasury Secretary, is looking at, and that as she looks at that ratio, it's not that disturbing. Should we be disturbed looking at it through that lens?
Look, when you look at it in terms of debt service, David, what that depends on, obviously, is what the level of the interest rate is. And if you believe CBO that the 1 month or 3 month Treasury rate is going to stay below 2.5 for 10 years, then you can be serene about debt service. But that's a kind of assume a can opener approach. My guess, given all the debt that we're accumulating, given what the Fed's going to have to do to contain inflation, is that rates are going to have to be substantially higher than that. And if you take a more realistic approach, you are looking at debt service levels that, whether you use the nominal interest rate or the real interest rate, are getting very close to the levels that Furman and I said would be dangerous. So I think it's absolutely right to focus on debt service as the issue, but we have, in part because of all the massive QE, where the Fed, which is after all an arm of the government, has bought up all the long-term bonds, we're now running the country's finances like a homeowner with a floating rate mortgage. And if you've got a floating rate mortgage, it's not enough to say that my debt service payments are low right now. You got to think about what could happen in the future. So I don't think that there's a basis for high serenity. And I look at all kinds of shocks that could happen coming out of defense spending, coming out of the need to reconstruct Ukraine, coming out of climate situations that look more serious, coming out of the fact that I saw some numbers yesterday that suggests that there's probably a 1 in 3 chance that we're going to have another COVID-level health event within the next decade. I do think we've got to be preparing for contingencies, and this is a time when we need to be reloading in terms of the fiscal situation.
So, Larry, finally, put this all together, if you would. Take the really robust jobs numbers that we've talked about, put it together with what you're admonishing the Fed. They should be at least willing to put on the table 50 basis point rate hikes in order to get our arms around inflation, given how strong the economy is. Where are you now on recession? Because people have been talking about recession for a long time. You've been talking about it. I've been talking about it. A lot of people have. We keep putting out the time for it. Where are you on the likelihood of recession, and when does it hit?
David, I still think that it is soft landings are very unlikely, that it's unlikely that inflation will come down to the 2 range without an economic downturn. And in a way, it's a policy choice when that downturn comes. And we have put it off. The worry is that when you delay taking your medication and then you only take part of your medication till you feel better, you don't really get cured, and there ends up being more pain down the road. It sure doesn't look to me like we're going near recession before the end of the summer. And if I had to guess right now, I think the Fed will end up doing enough to restrain inflation, and that's going to mean a quite soft economy sometime in 2024. But the dynamics are very difficult to gauge.
Okay, Larry, it's always such a pleasure having you with us. That's Larry Summers of Harvard, our special contributor here on Wall Street Week. Coming up, what do you do when you can't believe your own eyes or ears or even your own lawyer? That's next on Wall Street Week on Bloomberg.
policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Only on Bloomberg TV and radio.
Finally, one more thought. Seeing is believing. So said 17th century clergyman Thomas Fuller. But in the age of generative AI, seeing may not be all that it was once cracked up to be. Something Donald Trump Jr. showed us with a doctored deepfake version of The Office that had presidential candidate Ron DeSantis embarrassed that he'd bought a women's suit.
You make one tiny mistake, you're dead. I made one tiny mistake. I wore women's clothes.
And it's not just our eyes that AI has made us come to doubt, it's our ears as well. Not to be outdone by his own son, Donald Trump Sr., that's the former president himself, posted on Instagram his own deepfake audio that purported to be a conversation including Elon Musk, Mr. DeSantis, George Soros, and the devil himself.
I don't think George knows how to use Twitter.
Unless you think that it's only Republicans who are using AI to alter media reality, consider the case of the Democratic senator from Connecticut, Richard Blumenthal, who, as the chair of the Senate Judiciary Committee, recently started a hearing about regulating ChatGPT by opening the remarks generated by, you guessed it, ChatGPT itself.
We have seen how algorithmic biases can perpetuate discrimination and prejudice.
The words were not mine, and the audio was an AI voice cloning software trained on my floor speeches.
But let's be honest, none of us was going to be fooled by any of all that, which is more than you can say for the New York lawyer recently caught red-handed, submitting a 10-page brief to the court opposing a motion to dismiss, complete with multiple citations of cases he quoted that seemed just right on point. Unfortunately, neither the judge nor opposing counsel could find the cases that he cited. It turned out that the lawyer had relied on ChatGPT, which had simply made it all up. Not exactly what we lawyers had in mind when we pledged to become officers of the court.
I will maintain the confidence and preserve inviolate the secrets of my client.
But never fear, at least we have the news media to make sure we're always getting the straight story. Provided, of course, that you're getting it from the journalist and not from his own avatar.
Joining us now is a very special, slightly weird guest. It is, in fact, my own digital avatar.
Avatars have the power to enhance user experiences, enabling immersive virtual interactions and personalized content. They can facilitate remote collaboration, telepresence, and even assist with customer service.
That does it for this episode of Wall Street Week. I'm David Weston. This is Bloomberg. See you next week.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
My guest this week is the Pulitzer Prize-winning American photographer Lindsay Addario. Ukraine, Afghanistan, South Sudan, to name but a few, she has been there with her camera at the majority of the conflicts in the 21st century. I want to hear about the stories behind those images and what it's like living, working, existing on the front lines of these wars. Lindsay, thank you so much for joining me and joining all of our viewers. I know it's rare for you to be sitting in a seat safely away from what you're covering normally with your camera. You've come to the world's attention many times with your work over the years, but very recently, at the beginning of this year, in fact, just a few weeks after the war started in Ukraine, you did come to the attention of many people because you took a photo of a Ukrainian family of four trying to cross a bridge who had been killed, and that photo ended up on the front pages of the New York Times. Can you tell me a bit about how you came to that scene?
So I went directly to the East and was covering the East for about 10 days before the war started. When the war began, I went to Kiev and immediately was covering sort of daily missile strikes and the destruction and those who had been killed and injured. And so one day I was watching images come out from the wires and others who went to the Irpin Bridge. And there were, hundreds of civilians crossing, the elderly, women, children, crossing out of Irpin and all of those suburbs. And so we made our way toward the bridge through side roads. And as we approached, there were injured, the territorial defense soldiers were taking injured over to sort of a brick wall off to the side. So we ran across the street, and almost as soon as we got behind that wall, a round came in. So it was either a mortar round or a tank shell, we're not sure. It came in and hit sort of off to the distance. And then the Ukrainian military fired back. And so my security advisor said, would you like to go? And I said, no, because everyone knows this is a civilian evacuation route. And those rounds are probably going toward a Ukrainian base that's off in the distance. But how wrong I was. The next round came in closer. And so we dove for cover. And as soon as we popped back up, the next round came in right next to us, essentially. And it was sort of equidistant between us and a mother and her two children and a church volunteer that was helping usher them to safety. It was very chaotic. Obviously, we were all sort of in shock because the round had landed very close to us. Everything was very dusty. And our security advisor immediately went to the aid of the injured and to a soldier who was nearby. And by the time he called us over, the protocol is we wait to be told, it's clear, you can come. And so by the time he called us over, I ran across the street not knowing what to expect. Obviously, I knew there was someone injured, but I anticipated it being a soldier. And although there were civilians crossing steadily, and even during the strike, because nothing was shielded, so people had to continue to move. And so when I got there, I came upon these four lifeless bodies Of course, I didn't know if they were dead or alive at that point. I noticed sort of the tiny little moon boots of a child. And as a mother, that was sort of a incredibly jarring and devastating moment. And I was trying to survey, but I was also kind of in shock. And one side of my brain was sort of saying, you have to start photographing, and you have to take these pictures, because I knew that I had just witnessed, something that was an intentional targeting of civilians. And so I took a few photographs, but rounds were still coming in. So our security advisor, Steve, was saying, hurry up, work very quickly, and we have to leave. And so I kind of moved around the scene and taking a few photographs, thinking in my head also, I have to be respectful, and, perhaps I shouldn't show the faces. So I was trying to take pictures that showed the faces and that didn't show the faces, so that we had some options.
Well, the image I'm talking about, or certainly the version I've seen, you don't necessarily look at the faces, actually, now you've said that, the way that you look at the image.
You can.
You can see them.
You can see them.
But it's more you look at the scene of a
Exactly.
family.
Exactly. And so I've been covering war for over 20 years, and I know that there are so many images I've taken that have never been published because they're graphic. And so I was thinking of that as I was shooting, as horrible as that sounds, because obviously I've just witnessed the most devastating scene, but I'm also a photojournalist, and that's my job. And so I was trying different angles, and frankly, I didn't think the picture could ever be published because it was civilians.
Do you know the impact of that photo?
Yeah, I mean, it's been used by I think the United States ambassador to the United Nations to talk about the intentional targeting of civilians. It's been used repeatedly as proof that civilians were targeted, because I was there. I witnessed the run-up, and I know that whoever was firing those rounds was bracketing onto that position.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. We're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
You mentioned being a mother. Has that changed the job for you?
Yeah, I mean, it's definitely changed the job in the sense that I'm more cautious now than I was before I had children. I think to a sort of normal person who doesn't do this for a living, they probably can't see that. But for me, making decisions on a minute-to-minute basis in a war zone, I know I'm being more cautious. I know I'm not going sort of all the way to the front or as far forward as some of my colleagues might be going.
You also are now seeing, perhaps when you see an image, when you create an image, when you see the reality of a child who is dead in front of you, will have always affected you, I imagine.
Always.
Has it changed, though?
Yes, it has changed. I think, I have photographed children dying in Iraq, in Afghanistan, in Somalia during the Horn of Africa drought in 2011. And it was always devastating. But I think now, as a mother, the first thing I do is sort of put myself in the shoes of that mother. And I know, I live in constant fear that something will happen to my children.
So you're trying to keep yourself safe, but you're also trying to document at the same time.
Of course.
And perhaps processing it in a slightly different way. I mean, would you say you have become desensitized, though?
No.
And do you have to be in any way?
No, not at all. I mean, I think I have ways of dealing with my emotion in that moment. But, part of that is just really focusing on the task at hand, which is making photographs and looking through the viewfinder. That definitely helps me focus on taking pictures. But I'm not desensitized at all. I mean, I cry pretty much all the time when I'm photographing. I get very, very emotional, and that's okay. I mean, I don't have an issue with that. I don't know what my colleagues think of me, but, I think it's normal. I mean, I'm a human being.
And do you think, I mean, you talked about hanging back because of the risk as well, not necessarily going straight to the front. And yet when I asked you about that particular image, it sounded like it's very instinctive when you know you're not where you need to be and you are heading towards danger.
Correct. And that's obviously what I struggle with, because if I'm close and something happens a little closer or a little further from me, but closer to the front line, I'll likely go. But I think where I'm positioning myself is sort of a little removed back and then making judgment calls every day. If I hear that a school has been hit and 30 children have been killed, I will go. If I hear that a building has been hit on the front line, but no civilians were killed, I'm likely not to go. So I'm weighing sort of what will I gain from risking my life.
Although that building's been hit, but no civilians have been killed, I mean, this talks to the idea of, not you per se, but a criticism of those in your field of being war junkies, trying to find the very worst to document and being in places they don't need to be, sometimes causing perhaps more risk. What do you say to that?
For me, the highest toll of war is civilian casualties. Yes. So that's not being a war junkie, that is documenting reality. And the reality is we are in a situation where one country has invaded another, and every civilian who dies is on account of that invasion. And so I think that if I'm in a position and civilians are being killed, I have to document that. That is a very important part of the job of someone who covers conflict.
And presumably that for you, in this work that you do, you don't obviously just cover war, you've covered humanitarian disasters,
Correct.
Climate change, the effects on the planet on that. But when it is about civilians, it sounds like the justification you have to make to yourself, to your family, and to those who could be critical is that you are providing evidence.
Yeah, and that evidence has been used already by the United Nations.
Have you taken pictures of people killing others, of the actual killers before?
I mean, I've taken pictures of people who have been accused of killing others, but I have not been there sort of in the moment.
I just wonder what that's like as well, the seeing people do the very worst they can do to each other.
I think people are very smart about journalists. They obviously don't allow us access to things when they are killing civilians. I think that there was a time in the Korengal Valley, I was with the American troops, the 173rd Airborne. I had spent 2 months living on the side of a mountain with the 173rd. Me and a colleague, Elizabeth Rubin, for the New York Times Magazine. And the point was to understand the nuances of war and why so many civilians were dying in Afghanistan. And in fact, Lieutenant Colonel Aslan, who was the commander of the Korengal Valley, was very smart because he had this philosophy of transparency, because he believed that journalists needed to understand sort of the nuances of war to understand why civilians were being killed. And so we were in Operation Rock Avalanche, which was in the movie, the documentary Restrepo, that I don't know if you've seen it, but it's extraordinary. And so we were in that operation where we jumped out of helicopters in the middle of the night into the heart of Taliban territory, literally walked with everything we owned for 6 days, and eventually we were ambushed by the Taliban. And we were ambushed from 3 sides, and there was a huge gun battle. 3 soldiers were shot, 1 was killed. And in the retaliation of the American troops, I was standing with some of the soldiers. Everyone was very shaken up, of course. And one of the soldiers said, "Look, they're using Afghan women and children as human shields." And he literally had me look through the scope of his gun. And there were women and children on the roofs of the building where they were shooting from. And that is a case where it was incredible to witness. And I could only have witnessed that because I had spent so much time with these troops and really was willing to risk my life and to be there in the middle of Operation Rock Avalanche.
A shot you took during that maneuver, we're going to take a look at that. Can you take me through it?
There is an image, the aftermath of that ambush, where it's a very dusty picture. It is a scout team carrying the body of Sergeant Rugal, and he's in a body bag, and it was after that. And the scout team, Clenard, who is sort of leading the way, is crying, and they're walking through this very sort of desolate landscape. And I remember shooting that photograph and asking myself, what are we doing here? You know, what are we doing here years after 9/11, fighting in the middle of the mountains where there are no people, you know? And it just felt like such a waste that this young man had died for nothing. And in fact, a few years later, the American troops pulled out entirely from that area.
There's another image of yours I wanted to bring to mind and for us to have a look at and talk about. An 18-year-old woman in labour stranded in 2009. Tell me about that and how that came about.
So in 2009, I won a MacArthur Fellowship. That is, in America, it's called the Genius Grant. And it's essentially given to all different disciplines, from a cellist to a scientist to a photographer, where I was paid a salary for 5 years with no strings attached to just focus on my work. And I felt a lot of pressure to decide what to focus on with my work, because it was the first time I could decide, not be assigned a story. And so I started doing research, and I decided to focus on maternal mortality and why over 500,000 women a year were dying in childbirth at that point. This was 2009, as you said. And Afghanistan, where I had been working for a decade at that point, had one of the highest rates of maternal death in the world. And that was because there was such a bad road network. Women who were pregnant or in labor didn't have access necessarily to medical professionals or to clinics or hospitals that were staffed with doctors.
They just couldn't get where they needed to get to.
They just couldn't get to where they needed to. They had to take a donkey for 12 hours, and imagine being in labor, getting on the back of a donkey. And so I went to very remote villages in Badakhshan province, which was one of these provinces with high numbers. And on the way back, I was riding with Dr. Ziba, who was also helping me translate. And we noticed these 2 women on the side of a mountain, and there was not a man with them, which in Afghanistan is very rare. And we stopped the car and said, what are you doing here? Do you need help? And it turned out the woman on the right, Noor-Nisa, was in labor. And Noor-Nisa's husband's first wife had died in childbirth, and he was so determined to not lose her that he managed to get a car in the village. But when we met them, their car had broken down, so they were stranded on the side of the road. So I said, well, just get in my car. I'll take you to the hospital. We're going toward Faizabad, which was the capital of the state. And they said, no, we need permission from the husband, so we'll wait. And so I turned to Dr. Ziba and I said, okay, you have to find the husband. There's one road in the whole province. He's obviously on that road, you know. So she found him, of course, pretty quickly, and brought him back. And the whole family piled in my car, and we took them to the hospital. And everyone asked me if she delivered safely and if I took photographs. And yes, she delivered safely. But no, I did not take photographs because I felt like I changed the course of that story with my presence by taking them.
But you took a photo.
I took about 3 frames, and that photograph is one of those frames.
And that's when you had met and just seen it, because it's so striking, the blue.
Exactly. I met them, we asked their story, and then we asked permission right before Ziba left to find the husband. We asked permission for me to take a few photographs.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Do you think, on balance, being a woman has been a help to you in this field?
A huge help. Being a woman
rather
is
than a
huge
hindrance.
Help. Yes, everyone thinks it's a hindrance, but in fact, it's a huge help because people. First of all, I have access to men and women, and particularly when I'm working in countries like Afghanistan and Somalia, where men and women are usually segregated by gender. And people underestimate women, I find, and they still do. And so they sort of discount me and say, okay, sure, go do it.
It's nice to be underestimated.
Yeah, I love being underestimated. I love it. Yes.
It's one of those things. But I mean, I suppose on the other serious, much more serious side of it is that, again, when you're thinking and calculating risks, you know, rape as a weapon of war is a unique tool wielded against women.
Yes. And for me, when I've been kidnapped twice. The first time was in Iraq, and that was only a day, and it turned out, compared to Libya, was quite it was manageable in the sense that we were working outside of Fallujah. I was working with a colleague from the New York Times. We had heard a helicopter of American troops went down. We went to find it. We got caught by insurgents who thought maybe we were with the American occupation. We finally convinced them we were journalists. They held us until dusk and then eventually let us go. Obviously, it was terrifying. We had guns to our heads for about 11 hours. We didn't know if we would survive. Libya was much more violent, much more dramatic. We were 4 journalists in one car. Originally, we had been 2 in each car, but one of the driver's brothers had been shot at the front line, so he quit in the middle of the battle, and we ended up in one car. We had to decide how long to stay. That is not an easy discussion because with 4 journalists, everyone has a different perspective on how long to stay, what our needs are, how dangerous the situation is. By the time we decided to pull back east toward Benghazi, we ran into one of Gaddafi's troops' checkpoints. It was incredibly hostile. The rebels we had been covering started opening fire on that checkpoint, so we were literally in a wall of bullets. The men were pulled out of the car. Me as the only woman, I was sort of left sitting there because they didn't know what to do with me. But the car was not armored, so I had to get out of the car because I knew that I needed to get behind cover. I crawled across the back seat, and when I jumped out, one of Gaddafi's troops sort of came to me and was pulling at my cameras. Instinctively, I was pulling back, even though there were bullets literally going, zoom, zoom, next all around us. We finally made it to cover behind this sort of checkpoint building, and we're all told to lie face down in the dirt. We each had a Kalashnikov put to our heads, and we were about to be executed. We were begging for our lives. The commander came over at that point and said, "You can't execute them, they're American," which this was all in Arabic, and Anthony Shadid later translated for us. You know, in retrospect, I have no idea why they spared us being American, because in the Middle East, a lot of people don't like our foreign policy. And so we were tied up and blindfolded. And essentially for the next 3 days, we were beaten up, tied up, blindfolded, threatened with execution. And for me, as the only woman, I was touched repeatedly. I was not raped, but of course, in that time, being tied up and blindfolded, I thought of the many, many women I have interviewed over the years who have been raped. And so I sort of ironically looked to them for strength, because I thought, well, if they survived it, and if it happens to me, I can survive it as well.
Are you living just minute to minute?
Minute to minute. Yeah, I mean, in a kidnapping, there is no sort of an hour down the line. It is literally every second is survival mode. It is, what can I do to get through this fear? What can I do to get through this pain?
I mean, it sounds like the scene from a film, and yet it's your life. And I believe Jennifer Lawrence has been interested in your life, or there was talk of a film.
She was. We spent about 3 years together when Warner Brothers optioned the rights to my memoir. I wrote a memoir after that called It's What I Do, A Photographer's Life of Love and War. And that memoir was optioned almost immediately by Warner Brothers. Steven Spielberg was slated to direct, and Jennifer Lawrence was slated to play me. And that went on for 3 years, if not longer.
What's it like taking Jennifer Lawrence to war zones?
I took her to the border with South Sudan when it was very, very tense. She wanted to understand what it feels like to feel that fear and to be, you know, to be close to a war zone. Obviously, we had to worry about her safety, so I couldn't take her.
Yeah, you got an extra headache. You've got to worry about a Hollywood A-lister while you're dealing with everything else.
It was very stressful. Let's just say when I put her on the plane to, you know, from Uganda, I couldn't walk for a week. My back went out. But she eventually dropped out.
Okay.
And so now it is being made into a limited series.
Okay. So a TV series.
A TV series,
film.
Correct.
Okay. But at least Jennifer Lawrence now knows what it's like to do your job.
She does. She's just come out with a movie playing a character named Lindsay. So hey, I hope I helped.
She got that inspiration from. But what have you learned then from being in these scenarios, coming in and coming out of some of the worst things we can do to each other?
Yeah, I mean, I guess I've learned the capacity for survival, for resilience, for forgiveness, the fact that human beings can be equally evil as they can be amazingly generous and resilient. I think that I've learned a lot from the people I've covered, but I think we have to look at the ability of human beings to live both within those situations and to survive them after.
Well, thank you very much for taking us behind the lens with you.
Thank you,
Lindsay. And thank you so much for being with us. Until we meet again, take care and goodbye.
Source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
Look, I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing when we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. Now, what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
To receive the incoming calls from bettors, the bookmaker relies on several devices, which may keep his location or private phone secret.
Remember when gambling on sports was illegal in America?
Gambling was something that was in the shadows around sports, and it was considered unseemly.
Primary interest I have is in the integrity of the game, so that's why we've opposed sports gambling in the past.
Today, the idea of sports gambling once being illegal almost seems quaint.
The NFL is finally here, and I know you're ready to gamble.
This is probably going to be one of the most heavily bet props in the game.
What are some strategies for teasers in your eyes? Play them. Just play them.
Once allowed only in Nevada, betting on sports is now legal in more than 31 states, with more on the docket. And to say the floodgates have opened is putting it mildly.
This is the largest and fastest growth of gambling in our nation's history.
Legal sports betting in the U.S. went from less than $5 billion in bets placed in 2018 to $57 billion in 2021, and an estimate of $200 billion overall in 2023.
Showtime!
A-list celebrities, billion-dollar marketing budgets, partnerships with every major sports league. Today, sports betting is impossible to avoid. And the top sports gambling companies work more like Facebook and Google than a Las Vegas casino, using big data to encourage more bets from users while simultaneously keeping down big winners.
What we see with online sports betting and mobile sports apps looks a lot more like a slot machine than traditional sports betting.
We know that there will be some people for whom this expansion will cause devastating problems.
Sports gambling is a progressive illness. When you're a compulsive gambler and they're giving you all these extra propositions and they're giving you this live betting, you have no chance whatsoever.
Unfortunately, the history of legalized gambling in America is replete with failures of government and failures of operators to really seriously consider balancing the social costs with the economic gains.
So while sports is a multi-billion-dollar industry, it's possible the costs may outweigh the gains. Today, FanDuel and DraftKings are the undisputed giants of sports betting. Just turn on your TV during any sporting event. But they didn't start out that way. They started as daily fantasy companies, or DFCs.
Daily fantasy sports plays by its own rule set. You have to create your own lineup. There's a salary cap. You enter into these tournaments, you pay your entry fee, and then you win a prize depending on how you perform under the rules of that contest.
There were a few others doing it, FanDuel, DraftStreet. So it was really just, daily fantasy sports that we were pitching.
The question at the time, was it considered gambling?
Fantasy sports was in something of a gray area. It was viewed by some states as a form of gambling, and before that Supreme Court ruling, that wasn't allowed. You couldn't gamble on sports.
We didn't really understand the political angle that could potentially ensue. We just thought fantasy sports is a skill game that's kind of settled, and we went about building it in such a way.
I won over $2 billion thanks to DraftKings.com.
In 2015, daily fantasy sports, there was quite a bit of investment into FanDuel and into our primary competitor. And that money fueled a land grab for customers, which generated a lot of advertising. That advertising caught the attention of regulators who wanted to understand better what our product was. Probably the most high profile was the New York Attorney General.
Because effective this morning, DraftKings and FanDuel have both ceased and desisted from taking bets from New Yorkers. Daily fantasy sports operators are free to go to the legislature and the governor if they want to change the law.
Which is exactly what they did. Eventually, DraftKings and FanDuel ended up paying $6 million each in separate settlements with the New York Attorney General over false advertising claims.
That settlement paved the way for them to be welcomed into the club and ended up becoming something of a soft launch for these companies. It's a way for the leagues to get comfortable with them.
Once New York broke in our favor, it was clear that that was the trend that states were going down. We could start focusing on the path forward instead of fighting for our lives and defending ourselves.
Breaking news: the Supreme Court this morning striking down the federal ban on sports betting. Now it leaves it up to the states.
Overnight, because the Supreme Court ruling in 2018 allowed states other than Nevada to legalize gambling on sports, gambling has become mainstream in America.
It was certainly a happy day in the office as we all kind of frantically looked at our laptops and scanned through the decision together.
It didn't take long. Within about a year, sports betting was already bigger than daily fantasy sports.
After the ruling, the major American professional sports leagues, who all at one point denounced sports gambling, started doing a rapid 180.
But I think it's ultimately a positive thing, and our view is both from an integrity standpoint and a regulatory standpoint, and ultimately for states and federal jurisdictions to raise tax, it should be a regulated industry.
First, the NBA partnered with the sports betting companies, and then the NFL, MLB, and NHL quickly followed.
And now within 4 years of legalization, it's legal in more than 30 states. That covers 35% of the population.
While California overwhelmingly voted against legalized sports betting, it's still pending in a number of very big markets. But for the markets where it is legal, the race for customer acquisition was on.
Here are tonight's betting odds brought to you by FanDuel Sportsbook, the number one.
Over at DraftKings right now, it's free to enter $1,000 in free prizes.
DraftKings and FanDuel have dominated the market, boasting between 60 to 70% of the entire sports betting market. And they've spent massive amounts to get there.
You know what to do.
You're seeing very expensive celebrities, Jamie Foxx, Patton Oswalt, advertising sports books, advertising betting apps. And you're seeing it in these partnerships with sports teams in just about every major state that's legalized sports gambling.
Sky-high advertising budgets have kept both companies in the red for years.
DraftKings revenue was $1.3 billion in 2021. Its sales and marketing expenses were almost $1 billion in 2021, and that was double from the previous year.
We expect our first profitable quarter on an adjusted EBITDA basis to be Q4 of next year.
FanDuel, however, is the first to actually post a profit.
We were the first sportsbook in the U.S. to report that we were profitable in the second quarter of this year, that we expect to be profitable for the full year in 2023.
The other side of the coin when it comes to growing the sports betting business are partnerships with the sports leagues themselves.
These partnerships are hugely lucrative. These betting apps are partnering with just about every major sports team they can because it's a way for them to get their brands in front of viewers.
So here at DC United in my hometown, we have a retail sports book. We have retail sports books also at the Footprint Arena in Phoenix, the home of the Suns. We will have one coming soon in the United Center, home of the Blackhawks and the Bulls in Chicago.
As a partner, we're not just a category that they're selling, we're actually something that really is integrated into their game, into their fan experience.
We need to be woven into the pregame narratives when people are discussing the game.
For the leagues, this is a massive win. It makes fans more engaged than ever. Just think about it. If the Orlando Magic are playing the Charlotte Hornets on a Monday night, most people won't care. But if someone has money on that game, Well, now they're invested in every play.
We can help deepen the affinity that their customers have for the game and deepen the engagement that their customers have with their content.
Looks like you've got a bad case of single game fixation.
Along with the deluge of media marketing for sports betting comes seductive sign-up offers for free money.
Pick a sport, place a bet, boom, goes a dynamite.
The apps advertise risk-free bets. They advertise can't-lose parlays. They advertise all these ways that they're handing out free money to you, the lucky bettor. I found that these offers are actually too good to be true. I took up DraftKings on an offer of 20% bonus up to $1,000. So I put in $200 expecting to get $40 back. One of the limitations of this offer was that the bonus is awarded in tranches of $1 per $25 bet. So that meant that my $200 actually equated to $8 in bonus money. But if I kept placing more bets on the app, I would be able to claim up to that $200. The hitch was that I needed to place potentially thousands, tens of thousands of my own dollars at risk to capture that money.
I think our promotions are quite standard in the mechanics, not just with others in the US, but really with promotions that have been run throughout the globe for decades in more mature gaming markets.
So once these sites acquire these customers, they have to keep them there, and they have definitely found their hook.
The industry hypes the game within the game. These are in-game bets, and in-game bets are seen as a great growth market because you don't just place one bet at the beginning of the week and you're done.
In-game betting is one of the great examples of where the mobile online product really can be so differentiated from the brick and mortar product.
We have seen the adoption of in-play betting again be a bit quicker in the United States than perhaps we anticipated.
Whether you get your news on TV, on the radio,
on Bloomberg,
on the web, on the Bloomberg terminal, or the Bloomberg apps, the news that affects your business.
Here's what I'm watching. You do not want to miss this story. Betting on a bubble bursting
is our business. Bloomberg TV and radio. The world is listening.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
This is a simple case of where did the money go?
And the technology.
If people wish to invest in it, they must be prepared to lose their money.
I am still very positive on real utility into this space.
Bloomberg Crypto.
For decades, sports betting was limited to betting on just the games. Who would win, how many points the team would score, who will cover the spread. In-game betting allows the user to bet throughout the game.
Every pitch of a baseball game, every point of a tennis match, every play of an NFL game, on a free throw, on you name it, those are things that I think customers want and haven't necessarily been able to get in the brick and mortar setting.
This is advertised at you the whole game long. It keeps you thinking about betting and involved in betting throughout the game.
it really creates engagement at a deeper level, which of course makes people bigger fans and makes them tune into the content longer and pay more attention to it.
And if your bet loses mid-game, then you're pitched another bet to try to recoup your losses. It's dangerous because it does have the potential to keep you chasing losses.
Chasing losses is maybe the most dangerous phrase in sports betting.
I think there's an intuitive sense. If there are more things to bet on, that creates more of an opportunity for someone who has a compulsive behavior issue.
You look at the structural characteristics of in-play betting, it is extremely rapid. While there's an illusion of skill and control, actually, in many cases, those bets are just, it's almost like playing a slot machine. Every 5 seconds, you can bet a new one.
Which can make betting on sports less about heightening the game and more about getting a fix.
When you put sports betting in a mobile or online form, it no longer is tied or pinned to the particular sport event. Not only can you play in-game on multiple things continuously, you can also bet on after-game things. You don't have to stop when the game ends. You're very hooked in and confirmed in your behavior because of this constant fast feedback.
And while only 2% of gamblers become addicted to gambling, for the ones who do, it has the potential to ruin lives.
The history of legalized gambling in America has never been driven by concerns about problem gambling. And so as we enter this unprecedented wave, we're really concerned about the increase in gambling problems that will accompany the massive expansion of gambling.
Gambling really started to get bad for me when I was in college.
This is Joel Soper, a gambling addict and the author of Never Enough Zeros, a book about his life as an addict.
It got to the point where I owed a bunch of different bookmakers over $1 million.
Did you stop gambling after that?
No. When they came out with these apps, they had all the proposition bets. They had the live betting. So now I'm in action all day, every day. From the moment I get up, I'm betting on international soccer. To the moment I go to bed, I'm betting on Chinese tennis.
With the help of a gambling treatment program, Joel was eventually able to kick his gambling addiction and is now devoted to helping others.
Because of my experience in the sports gambling world for so long, now I can share my experience, strength, and hope to help other people caught in this same addiction. I want to educate people that are in positions to talk to people about the risks, the dangers of this sports gambling.
Hey, it's Craig Carter.
While the risk for addiction is small, both DraftKings, FanDuel, and others say they are dedicated to what's called responsible gaming.
By and large, in the United States, that responsibility is primarily on the individual. But those who operate, profit from, and regulate gambling also have a role in responsible gambling.
Should always be a part of your playbook.
Responsible gaming is something we wake up every day thinking about. It's a top priority of our business.
The health and longevity of the industry really depends on not just us, but everyone getting this right.
I think that their economic future depends on responsible gambling.
The former employees I spoke to said that there was always a company-wide message that responsible gaming is important. What I also heard from these employees was that most of these responsible gaming measures are not proactive. They're typically reactive. There's typically only an intervention after the damage has been done. They're falling behind on their mortgage. They've run up a huge credit card bill. They're feeling suicidal.
For now, the main requirement in many U.S. states is that companies provide helpline numbers and avoid marketing to people on what's called self-exclusion lists.
There are some companies that have done some innovative things with their apps. They collect enormous amounts of data. They see how their users gamble.
DraftKings and FanDuel collect huge amounts of data on their customers, and they're able to track their customers in ways that casino bosses would have only dreamed of.
While that data is used for simple things like confirming customers' age and location, it has other applications as well.
These companies are not simply gambling companies, they're technology companies, and they collect and use data in the same way as other big technology companies.
We're 100% a technology company. That's the background that, myself and my co-founders come from.
We do obviously have a lot of information about what users do on our platform. So what bets they make, what sports they're interested in. We use that information to help run our business better.
As you use the app, you're tracked in ways that we're familiar with from social media sites and other internet sites. The companies have a good idea of your net worth from the other websites you visit, from Google Analytics data.
State regulators allow the companies to profile customers based on betting histories and limit the size of some wagers expected to win, much like traditional casinos kicking out sharps from the blackjack table.
Well, we limit customers for a variety of reasons. Some of them are because we have particular customers that we think take advantage of certain weak lines and things like that. Obviously, we want people to win. That's an important part of the experience. So we've never really shut off a customer for that reason, but we also have to limit our risk exposure too.
Ultimately, by leaving it up to the states and with no federal legislation on the horizon, these organizations, for the most part, are left to police themselves.
The vast majority of companies are taking these apps and they're tuning them up to 100 in terms of maximizing revenue. They build in little or no responsible gambling features.
The federal government is more focused on alcohol and opioids than gambling at this point.
The state level expansion of sports betting has been accompanied by a lot of lobbying, but rarely has that lobbying included strong responsible gambling provisions or problem gambling funding.
The gaming industry writ large loves to say there is no evidence, research-based evidence that points to any one intervention or any one form of regulation.
The main research that's been done is funded by the industry itself, and the industry prefers to focus on research that looks at individual responsibility rather than the potential responsibility of the industry in marketing these products.
Bill after bill that we've seen introduced since 2018 has been very specific about tax rates and the number of licenses and every other aspect of sports betting, but somehow, curiously, problem gambling and responsible gambling gets left out.
While individuals ultimately bear the responsibility for their own actions, many hope the biggest companies in this area will make safety an ever bigger part of their mandate, if only to assure this boom doesn't end anytime soon.
I think we can meet this moment. I think it's going to take a lot of hard work. It's going to take a lot more investment by the industry, but that's starting to come around.
To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Trading card industry would almost seem like it was a secret society for years.
Right.
And now you're seeing Mickey Mantle cards being sold for what, $12 million. Yes. So I think now there's just a lot more attention to the industry, and that's why the idea of Arena Club came about.
Let's start with the news. You've got a lot going on with your company. What's happening?
I first met Brian, this was years ago. I think it's shortly after I retired, and everyone knows the success that he's had in the entrepreneurial world. And we started having a conversation about trading cards. And my parents used to have all of my baseball cards when I first came up, whether it's minor league cards, rookie year, and we had a flood at our house. So we had a lot of things that were ruined. A lot of the cards that I had collected, and a lot of times you try to build businesses, and it starts with, does it make sense? And this just made sense to me. And we're excited about Arena Club.
Yeah, we're super excited to join forces here. And the idea was to truly digitize the physical and to create these online showrooms for folks to buy, sell, and trade. We really wanted to bring to life the passion of card shows and card shops and so forth, and have people experience that online 24/7, anytime they want.
So we've seen some interesting sort of twists and turns over the last couple of years, especially with the digital aspect. How does the sort of NFT play into the business case here?
When someone sends in their cards to Arena Club to be vaulted into our system, we digitize it, we put it on blockchain, and you do get we're calling it a digital proof of claim. Some people might call it an asset-backed NFT of that card. So it's a digital representation of the physical card.
And so obviously you have a little bit of a different relationship with trading cards. How did you view them sort of coming up as a kid?
Yeah, we've joked about this. I got trading cards just for the gum.
Yeah.
You know what I mean? But that's why we got cards. And I just remember sitting down, I was a big Yankee fan growing up. My grandmother, huge Yankee fan, talking about Babe Ruth cards that she had back in the day. And I just started collecting all the Yankee cards. And then, you have a dream of one day being on one. But look, you talk about having passion for trading cards. Brian's that guy.
Most kids stop collecting, right? But I just kept collecting in high school, college, law school, young adult, old adult. I'm still collecting today, so it's a lot of fun.
Honest, I think, is probably one of the companies that people know you best for. What do you take from those experiences that you apply here, Brian?
I think throughout my career of being an entrepreneur, I get very passionate about what I work on. And that passion bleeds into the team, it bleeds into the consumers. I think we're definitely building that foundation to build a company that will be around for generations for kids to enjoy.
Where is baseball right now? I mean, it's America's pastime, exciting season this season, but what needs to happen for baseball next?
Look, baseball in my mind is the greatest sport in the world, but look, you can't kid yourself. The younger generation, they want to see more action. Baseball, you can go 15, 20 minutes without seeing a ball in play. And the days of sitting down in the stands and talking to the person to your left and right, those are way gone, right? Now it's people want to be entertained. They're on their phones all the time. So you have to figure out a way to increase the action because it is entertainment. No matter how you look at it, people want to go and they want to be entertained.
I'm just a fan of the sport. It's my favorite sport. Nothing makes me happier than going to a ball game with my son and my family and rooting for my team. I think...
what team is that?
It's the Los Angeles Dodgers. Sorry, Derek.
That's all right.
He just wanted to press the point. It's fine. I'm a Braves fan, so this is an uncomfortable table to be sitting around right now.
I can tell you everything the Dodgers need to do this summer. I mean, if Aaron Judge, if you're listening to this, hopefully you'll be a Dodger next season.
Boy. Oh, good Lord. I feel like we're going to throw hands at this point. Anyway, guys, thank you so much for the time. It's really good to be with you.
Thanks for having us.
Part of what I love about business is you get to build things from nothing. I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full service shadow banking with nobody in charge.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others.
Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
This is Bloomberg Daybreak Middle East.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close. Welcome to Bloomberg Crypto.
It wasn't quality stocks doing well. It wasn't safe stocks doing well. It was story stocks, what they call sometimes glamour stocks. That's the tough environment for our process. We kept trying to prove to ourselves that maybe value is never going to work again. And we kept concluding, no, it's going to work again. The world's just gone crazy. I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
Cliff Asness was supposed to be a professor of finance and economics.
Like, what we're studying in class is interesting, but the research I really like. I asked him a very naive question because the answer is very obvious. What do I do if I want to do what you guys do? And they said, you get a PhD.
But along the way, he changed paths, leaving academia for a role at Goldman Sachs.
I was there in the summer of 91, and then I went for a year in 92, thinking I'm taking a year off the PhD program just to see if I like this. I'm on, year 31 of that sabbatical, so it does appear to have stuck.
And for the past 25 years, he's been running AQR, the hedge fund he founded in 1998. Asness is a so-called quant, an investor who uses data insights and computer algorithms as a method to build portfolios. And his strategy? Find cheap stocks and bet on them long term.
What quants call value, and I say quants, I mean practitioners like me and academics, is basically price to fundamentals. If something looks cheap, scaled by some fundamental, and the cheap tend to outperform the expensive.
That trade took a heavy beating for years after the financial crisis, but has recently started to pay off again. 2022 was AQR's best year on record. Its longest-running fund gained more than 43%.
At the end of the day, you go, no, we think this is a giant dislocation, and we're going to plant our feet and say, all right, most of the time we try to make money the easy way. We're going to make even more money this time, but it's going to be the hard way. That happened then, and it happened now.
Let's talk about the environment we operate in today. We have high inflation. The Federal Reserve has been jacking up interest rates fairly steadily for more than a year or so. Do you think that's the right strategy? And do you think the result would likely be a so-called hard landing as we can talk today?
Okay, first I got to give you the disclaimer. I am the quant geek, long and short, so I don't pretend to be a great macroeconomist, but of course it's a backdrop, and of course we look at our strategies and we think about what macroeconomic environment are our positions implying we favor. I don't think the Fed had much of a choice. I think they were slightly behind the curve. My biggest concern, and probably our firm's biggest concern, is stocks and bonds seem to be taking a very, very different view. Bonds, whether it's a risk premium or a forecast of future interest rates, if it's a forecast of future interest rates, what's priced into the short-term curve is multiple severe cuts over the next year to 2 years. That is a recession and not a mild one in the forecast. Equities are kind of, I'm not saying it's a graveyard, but they're whistling past that. So that doesn't mean bonds are right. Equities could be right. You could get the what some people have called the immaculate deflation, where inflation comes down and growth doesn't suffer. But if inflation stays sticky, or it comes down because we enter a non-trivial recession, it's equities that I think are a scary place. They're not priced very consistently with bonds, and we're going to find out who's right in the next year.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, it doesn't mean they think it's likely. They just mean they think it's possible and would be terrible.
So let's talk a bit about your background and how you came to start this company. Where were you born?
I was born in Queens, New York.
Into middle-class family?
Middle-class family.
And were you a math wizard when you were growing up?
If so, I didn't know it. I was certainly a mathy kid, a nerdy kid. Video games, Dungeons and Dragons. It was the 80s.
Where did you do well in high school?
Every parent-teacher conference used the words underachiever. He's not trying that hard. He's phoning it in. Different era. You could still get in college with good SAT scores and a B+ average, but I definitely cruised through high school without ever really trying. I had fun in high school.
And then you went to Wharton?
I went to a dual degree program at Penn between the Wharton School and the engineering school.
And you got a summa degree?
Well, it's very nice of you to mention it. But yes, summa cum laude in both.
And then you decided to go right to Wall Street, or you decided to go to graduate school?
I decided to go to graduate school. I had done some work as an undergrad, just for money, computer programming work for some Wharton professors, helping them with their research. And so I was coding up the tests that we were doing, and I just liked it. I'm like, well, we're studying class is interesting, but the research I really like. I asked them a very naive question because the answer is very obvious. What do I do if I want to do what you guys do? And they said, you get a PhD. And I said, where do I go for that? And they all said, shut the door, because I was at Wharton. Nothing bad about Wharton. I still love my alma mater. But 9 out of 10 of these conversations were, go to Chicago.
So you went to the University of Chicago, but to get an MBA and a PhD in economics. So there you were a research assistant for Eugene Fama, who won the Nobel Prize in economics for, among other things, you would say the efficient market theory, which is to say it's very difficult over a longer time to beat the markets. You worked for him as an assistant, but you're now every day trying to beat the market. So how do you square those two?
I actually think we agree on a ton more than we disagree. Gene works very closely with a fantastic firm, Dimensional Advisors, where it's not exactly the same. We believe in momentum more than Dimensional. They believe in what's called the size effect more than we do, but we overlap a lot. Where we maybe still disagree is there's this famously long and boring fight in academia about why a strategy works. After deciding it does work, that's the key to the real world. Does it work? In academia, you want to know why. And fights have always broken down into, do they work for Gene Fama, efficient market kind of reasons? If something is riskier than something else, it's efficient and rational for it to get a higher return. And then there are behavioral reasons, errors investors make a strategy work. I've moved more towards the error side in my career.
So you got your MBA and your PhD, and you're ready to be an academic, but then you went to the dark side. You joined Goldman Sachs. How did you explain to Gene Fama you're going to Goldman Sachs and becoming a money person?
Well, Gene definitely saw it as the dark side. His immediate response was, "Why do you want to go be a salesman?" And I said something like, "I'm not in sales, I'm in research." He's like, "They're all salesmen." I think that's a bit of an exaggeration.
All right, so you leave in what year?
We left at the very beginning of '98.
What did you raise initially?
We raised $1 billion. We very quickly realized to launch a traditional money manager, you needed a 5-year track record on your own, not just from Goldman. You needed to look more like I look now than I look then, a little gray beard, maybe not so much hair. But to launch a hedge fund, you needed to have a good pedigree, a good track record of whatever length, and to say you're closing. That really helped. We probably could have raised $2 billion, which was more about the market than it was about us, but we hard capped it at 1.
Okay, so you have $1 billion, you get started, and you do reasonably well from the beginning? No.
About a year and a half in, I would tell people when they'd ask similar questions, I go, "Well, we raised $1 billion, and through diligence, hard work, and some good calls, we've turned that into $500 million."
So did the investors didn't say, "Give me my money back"?
Some did, but many didn't, and some gave us more. I told you we only launched a hedge fund, and this was stupid of me. We only launched a very aggressive hedge fund, targeting about a third more swings than the stock market. Hopefully those swings aren't very correlated to the stock market, that's the point, but trying to make an awful lot of money. The tech bubble, much like 18 through 20, they always say history doesn't repeat, but it does rhyme. I think these two are in between. I think it rhymes really well. It doesn't perfectly repeat. We saw cheap stocks, as quants would define them in the simplistic way, be destroyed by expensive stocks. That's the tough environment for our process. 18 through 20 was a very similar environment. I like to joke, almost all the time, our job is about brains. Once every 20 years, it's about another word that starts with B. And I think this is key to retaining clients. You can't fake it. They have to get that you're not just defending yourself, that you're trying to figure out what's going on. At the end of the day, you go, "No, we think this is a giant dislocation, and we're going to plant our feet and say, all right, most of the time we try to make money the easy way. We're going to make even more money this time, but it's going to be the hard way." That happened then, and it happened now. I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
Countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
In 2022, investors came to a fork in the road. The path they chose made all the difference. Those who chose growth stocks ended up trailing value investors by a factor of 3. And in percentage terms, growth lost to value stocks by the most since 2000. In a year when the Federal Reserve dominated headlines by raising interest rates in an attempt to lower inflation, it was no surprise that growth stocks would be hurt. These are stocks that tend to outperform the market based on prospective growth and have the potential to do better when rates are falling, and they may be the first to decline when the economy cools off. As a result, the going got tough for supercharged tech stocks like Meta, Amazon, and Google that dominated the decade after the financial crisis. In their place came value, stocks that are considered cheap compared to their revenues, like energy names ExxonMobil and Occidental, as well as insurance and food companies. Quantitative bulls have been saying it for years. Value was due for a win. Anti-growth forces such as rising bond yields and a hawkish Fed made it happen. Last year, 2022, was a year that your longest-serving fund turned out to have a rate of return over 40% annualized. What did you do last year that made that fund perform so well?
Basically, we did something fairly similar to what we do every year. We have a process that involves value investing, trend following, quality investing, looking for positive carry, looking for good momentum, that had suffered a lot from 18 through 20, all from the value component. We analyzed that. We kept trying to prove to ourselves that maybe value is never going to work again. And we kept concluding, no, it's going to work again. The world's just gone crazy. So I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
Now, Warren Buffett is a famous value investor, but in the quant world, which you are very important in, is value investing the same in the quant world? Value investing being you're buying something that is supposedly worth $1 for 50 cents.
Yeah, it's related, but it is not the same, and this has caused no end of confusion. What quants call value, and I say quants, I mean practitioners like me and academics, is basically price to fundamentals. If something looks cheap, scaled by some fundamental, we all might argue about what the best one is: price to earnings, sales, cash flow, free cash flow, some proprietary measure of fundamental strength. And the cheap tend to outperform the expensive long term. That is the famous academic value effect. That is not the holistic measure of value a guy like Warren Buffett or any Graham and Dodd style value investor would look at. In fact, they get quite annoyed sometimes. They go, that's not value, that's just price. You're just saying it's cheap. Value is it cheap versus the growth opportunities, versus the moats around it, versus the safety of the stock, versus good things happening. If it ever gets this far, the quant should explain, we believe in all those same things, just semantically, we call those separate factors, and we add it up. But that little miscommunication has caused a lot of differences. If you look at Warren Buffett's track record, as amazing as it is, no one would call Warren Buffett a quant. Yet, he is very correlated with what quants would call the value factor, the low risk factor, and the profitability factor. He buys companies that make a lot of money, aren't very risky, and then he looks for a decent price. It's not the first thing he looks for.
Warren Buffett has famously said that if you were to take, let's say, your money and put it into a public equity index fund over a 10-year period of time, you will do much better than if you put it in the best hedge funds over that 10-year period of time. You run a very well-known hedge fund. What do you think of Warren Buffett's view?
It's one of these situations that's odd, where I do think there are places and smart things you can do that can exceed as a portfolio, just the S&P 500. He's still giving good advice for the average person listening to it. It's advice I've given on my own. I've been at conferences where people have asked me what to invest in, and I've gotten a sense they were very unsure. And I've said, unfortunately he's passed now, but I've said, I have a good friend named Jack Bogle. You might want to look him up.
Founder of Vanguard.
Founder of Vanguard. Not a bad piece of advice. I think head to head, there was a famous bet along this line, and Warren won it by leaps and bounds. I think Warren's going to win that bet more often than not, but I don't think it's the right bet. A hedge fund, properly constructed, is meant to be added to a portfolio and make an overall portfolio better, allow you to do other things elsewhere, increase risk-adjusted return. It's not necessarily supposed to blow away the S&P.
So speaking of portfolios,
Sure.
Recently BlackRock said through one of its institutes that maybe the traditional 60-40 ratio, which is to say 60% in equities, 40% in debt, is something which has been accepted for a long time as a very good portfolio construct, may not be the thing of the future. Maybe 60-40 is outdated. Do you have a view on that?
Yeah, I think outdated is going too far. Somebody who owns a 60-40 portfolio and sticks with it from here over the long term doesn't panic, doesn't get greedy and try to double up if they think it looks, doesn't try to time it. I still think they're gonna make decent money. I do think they're gonna make less than they did, say, in the 20th century. So the next question is, can you do better than that? And here I feel a little guilty because I'm gonna kind of agree with BlackRock, but I'm also gonna admit that I think I would say this in any environment. I think there are uncorrelated or low correlated diversifiers you can add to a portfolio to make it better. When the portfolio itself, say 60-40, is offering you very large long-term expected returns because markets are scared and everything looks cheap, you still want to do a little better.
So let's suppose I'm an average person and watching you and saying, you're a very smart person, maybe I'll give you money. But on the other hand, I'm nervous because there's a war in Ukraine. U.S.-China relations are very bad. Inflation is very high. Interest rates are going up. Maybe I'll just sit at home and keep my money under the mattress. Why is that a bad idea?
The old Rothschild, buy when there's blood in the streets. When the world's, scared, be greedy, and the world's greedy, be scared. I think everyone is scared, and that would push you to say maybe it's not a terrible time. When I look at the prices of assets, I would greatly prefer in a time like you just described, when things are scarier than normal. I would really like it much more if this scary time corresponded to cheap assets, not assets at least not as bad as 2021, but on the expensive side. I think the opportunity and value that we didn't start talking about till 2018. Value lost for 8 years post-GFC. We did very well. We're not all value. End of 2020, after COVID, it looked ridiculously cheap. It looked more cheap on our measures than even the dot-com bubble of 99, 2000, which I experienced and never thought I'd experience again. So I am talking my own book, if you will, but we love the value trade. One day we won't be value anymore. Again, we go through long periods where we trade negatively correlated in geek speak to value. This is not one of them. We also like some alternatives such as trend following strategies. Trend following strategies can have long periods of not doing much for you, but tend to like macroeconomic volatility. It's kind of their reason for living. And I don't think, nothing's a certainty, but just like what you said, I tend to think we'll be in a period of macroeconomic volatility for a while. I look at our returns every day. I'm like, I think we should have made money today and we didn't make a lot. What happened? I'm very, very involved in that, but I do not approve every trade.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So you started with $1 billion.
Yeah.
You took it down to $500 million. But what do you manage today?
Just about $100 billion.
And you have a goal to make it higher? Or?
Every manager probably has a goal to make it higher, but we don't write down numbers we hope to hit. We just hope to do well and have it grow.
On your company, how many employees do you have today?
About 500 to 600.
Every trade that's done has to be approved by you in some way?
No, that would be exhausting. We have processes. We have 1 million checks. Anything out of the ordinary comes to me very quickly. But we trade, many days we trade thousands of securities. I'd be signing things all day. I look at our returns every day. I'm like, I think we should have made money today and we didn't make a lot. What happened? Trying to dig in. I'm very, very involved in that, but I do not approve every trade.
What type of people do you hire? All math PhDs or that kind of equivalent?
First, yes, we do hire a fair amount of math or economics or finance. computer science PhDs. There are some amazing researchers who came to it with a very different path. If someone was an art history major, and one of my daughters is, and so I'm not putting it down, but you don't expect them necessarily to be the one who wants to do quant stock selection research, but it does happen. They learned something, they read on their own, there are autodidacts. But as a fishing hole, what are you going to look for? Yeah, for researchers, we start in that kind of rarefied academic world. Some are PhD students, some are new PhDs, some we convinced to leave academia and come join us. But that's hardly the whole firm. We got a few hundred people doing research, but we got a few hundred people doing other things. There's room for all kinds of skills here. One thing I think our firm excels at is explaining some things that I don't think they're as complicated as people think, but maybe intimidating. When you hear the word quant, I'm not explaining things in English and describing it. And there you have to fish in a different hole.
So a couple final rapid fire kind of questions. So if I said to you, I have $100,000 to invest, and to me that's meaningful, where should I put $100,000?
Subject to risk tolerance, I'll tell you what I'm doing with my own and my kids' money. We have our money pretty gigantically overexposed to this long-short value trade that I'm speaking of. It's not an entire portfolio. And for an individual, I'd have to do a little more coaching. You know, this could get worse before it gets better. But I'm eating my own cooking, and I'd have to lead with that advice.
What is the most common mistake that investors make?
Oh, I've made every one of them. I would probably go with obsessing about every line in the portfolio more so than the total portfolio. You got to look at the lines. How am I doing here? Is the manager doing what they said they were doing? But very often you build a portfolio, so different parts are working at different times. And I've been on a ton of investment committees. I know you've run many investment committees. At least the ones I've been on, we tend to talk about the two at the bottom all the time, which is fair, but you got to ask yourself, why are they there? Is this their time? Should they be there? And you should ask the same questions about those at the top. Are they taking too much risk? So I think people have to look at the line items, but number one should always remember they're building a portfolio. They're not buying individual slots in the portfolio.
What's the best investment advice you've ever received?
Pretty much every week, my wife tells me, stop looking at the screen. You'll be a happier man, and she'll be a happier person married to a happier man.
Hi, I'm Francine Lacroix. Join me on Leaders with Lacroix as we explore what drives the most influential people on the planet, with guests like U.S. Special Presidential Envoy for Climate Change, John Kerry.
Climate has no affiliation with any party or ideology. Listen to the scientists. This is not a matter of ideology. It's not a matter of politics. That's the challenge.
Leaders with Lacroix on Bloomberg Television, TV Go, and Bloomberg.com.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg. Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
What have they done to Earl?
Ruined him. That's what they've done. Well, it's not even they, is it? It's AI. Like, AI made all of this.
Exactly. You can't even call it art. It's a Van Gogh ripoff.
This is meant to be the future of art.
If this is the future of art, I think we might be in trouble.
If a generative AI is asked to create a picture, it does so after being trained on vast troves of imagery. It can't produce, for instance, an image of a snail riding on the back of a donkey in the style of Michelangelo without learning what snails, donkeys, and works of Renaissance art look like. This is how systems like DALL-E and Stable Diffusion function. But it angered artists and copyright holders alike, who say this process is akin to having their life's work stolen, then imitated on demand, without giving any credit. It's already resulted in multiple lawsuits, including one filed by Getty Images, which was quick to point out what looked like a corrupted version of its own watermark appearing in AI-generated images. But in the art world, nothing new is produced without some influence from what came before it. So how is this different? The late Steve Jobs once said, "Good artists copy, great artists steal." But he stole that line from Picasso, who in turn, it's been suggested, adapted it from something he'd read in a magazine. So maybe a better way to advance the argument isn't just to ask if AIs are producing highly derivative art, but whether the AI is even an artist at all.
Jason Silva, you're a content creator, a filmmaker, and you're also an artist. What do you make about artificial intelligence and art right now?
Well, what I think is very exciting about what's happening with AI art, and by the way, thank you guys for having me, but I feel like it's this culmination of like shrinking the lag time between our imagination and the ability to sort of instantiate our imagination through this coupling between imagination and synthetic intelligence.
But isn't that buffer time the creative process? I think, some critics would say that the process itself, the journey of artistic expression, is just as important as the product itself. What's your response to that?
Well, I think that is a fair point. I think for sure sometimes the creative process and the wrestling with the material and having to learn the craft is part of the muscling of our expressiveness, for sure. But when we first, developed tools like, digital tools for illustration, or even the technology of the oil painting, I mean, those were tools that, yeah, there was a learning curve, but before there was oil painting, there was no possibility for Vincent van Gogh.
Which is represented here, as you can see.
Yeah.
Very accurately represented here.
I feel like every time we have a new technology, a new tool that an artist can use to express himself, I think it's a good thing. And while I agree with what you're saying about like there being a value to having a learning curve, with AI art, yes, there's an instant capacity for the realization of a visual work of imagination, but the better ones are still going to be the ones where people learn the tricks of evoking the right prompts or the right spell casting, and so it will, I think, over time, it create a new kind of artistry, which will be who can prompt the better artistry from the AI platforms.
I don't think I cast any spells when I attempt to do art. I mean, you've seen my art. We've had an example of my art on this show before now. And
no offense, Nate, but it was very...
It looks facetious, but it's not. It's just terrible. And that makes me very excited about AI in general, because now I can actually look like I know what I'm doing. But
there are going to be people that might know the difference and might say, hey, look, I don't think this guy knows what he's doing, although... I don't know, it could fool some, but...
No, they'll think I'm a genius. Let's just be honest.
Yeah, I mean, I think our creativity is really what defines us as a species. I think in so many ways, it hints at our capacity to not just perceive the world as it is, but to take in data from our senses and kind of remix it in our mind's eye. And so our capacity to imagine what doesn't yet exist and then bring it into existence. That's the hallmark of our creativity and part of the great mystery of what makes us, not just human beings, but human Imagineers.
Earlier this year, there was, let's call it art for the sake of argument, there was a banana duct taped to a wall. And,
we're not picky here with our art, as you can see.
And someone ate the banana, they ate the artwork. And someone put a new banana back in its place. Now, It's not my place to sit here and say whether or not that was good art or not, although, for the record...
We have thoughts.
It's fruit on a wall. But that's not really something that AI could disrupt, right? What's the AI banana on a wall?
Yeah, good point. Well, in the world of high art, to each his own... sometimes the things that get sold as high art for exorbitant amounts of money are pretty astounding. But again, to each his own. That's the wonderful thing about art, is that anybody can choose what they think is artful or creative. I think it'll be interesting with AI art, whether AI art starts getting sold for insane amounts of money or not. I tend to believe that as these technologies advance, the price point eventually goes to zero.
I tend to think that it feels optimistic if I'm an artist who's kind of been doing work through more analog forms, and now that you have AI developed art kind of coming in and flooding the market, like you said, that could dilute the value, and how we price that is tricky. But I guess when it comes to the artist's perspective, like, is this hindering their ability to make money? Is this going to kind of become, a different kind of, profession?
These are legitimate concerns. There's a lot of disruption happening, and it's only the beginning. We're living in an age of exponential digital transformation, and so we must get ready for these challenges and for these questions that will come up.
How do you go about crediting AI-generated art? What was conjured up in your own mind versus what was derived from something else? How do you go about that process?
So I would say, this art piece was done in collaboration with digital sentience. Let's get playful here. Like, when you type in the prompts, they're pulling from this like 11-dimensional latent space.
Sounds a lot like string theory.
It has, but in this latent space, basically it's infinite possibility. So if you do a prompt that says, orange bananas flying through the sky amidst grizzly bears and psychedelic cotton candy, it's pulling from what this like sort of synthetic imagination has read from all the data training of all of these, the suchness of these concepts. So there's like a region for like banana-ness and a region for like grizzly bear-ness, and then it pulls from those latent spaces and through the process of diffusion brings it into a static image. That's very similar to this world of our inner life, but I suspect that through this AI art, we could learn about imagination by essentially building a synthetic imagination.
God, bananas keep coming up in art. Like bananas.
We've gone down a fruit rabbit hole.
Yeah,
we have.
On that note, Jason, thank you so much for joining us.
Thank you guys for having me. Appreciate it.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Boris Eldagson, thanks so much for joining us. I know you call yourself a lens-based artist, and I was fascinated earlier this year when you made headlines turning down an award, a very prestigious photography award, because you'd used AI-generated art to win it. Can you talk us through the story there and how that unfolded?
I applied to make a test. I wanted to see if photo competitions are aware of the possibility that people hand in AI-generated images. I'm very active in the German scene, do like lectures and workshops on AI-generated images. So I checked last autumn the big photo competitions, if they have changed their guidelines or not. And if they haven't, I just applied with an AI-generated image. And so I did with the Sony World Photography Awards.
But you knew what you were doing, right? I mean, this was kind of a cheeky move on your part.
Yes, but I had no further plan where this would lead me to. You can't just have an evil master plan and just start like this. It was just, okay, let's do a test. Let's see what happens. And I applied at 3 different competitions, and 3 times I was amongst the finalists with the same image.
And where do you think the responsibility lies in more broadly speaking, in the disclosure of use of AI in photography, whether that's purely generative stuff or just in terms of very advanced retouching or manipulation?
I think the main problem I saw, and this is why I wanted to speed up the discussion by my refusal, is that the photography world has not come to terms with the new situations. Most players in the photography world have no position on the relationship between AI-generated images and photography. So I had to do something disruptive to get this conversation going, and I'm very happy that it is happening on such a big scale right now.
Why do you think there is a hesitation to take a stance? I mean, either you believe that it's art or you don't, but it sounds like there seems to be a reticence, like if you do, then you have to do something about it. But what are your thoughts there?
I think it's quite complex, because one thing is it photography or not? And then you can say, is it art or not? And what's your definition of art? It looks like photography, but it is not photography in its definition for me. For photography, you need a lens. There's something in front of the lens which reflects light. If you generate an image by AI, it's often done by a prompt. This is why I like the term promptography. And you don't need a lens, you don't need an object. You need the internet, a browser interface, and a vision of how this image should look like.
I love that word, promptography.
Well, we're making stuff up now, and not so dissimilar from like, there's no vocabulary to describe a lot of like what's coming out. And how important is the process of, creating art and the journey and the imagination behind it, as much as the product itself?
I think it's very important, and both differ. The process of photography is different from promptography, and the more I work with both, I think it's very important to tell that I like both. I'm not pro photography only or pro AI generated images only. It's like, I don't know, like a mom and two kids. I haven't invented it, but I feel very close to both techniques. There are some things that only photography can do. I have been photographing at night in Berlin for 15 years. It is like a hunt. When I'm creating images on my laptop, I can be wherever I want to. The world around me is not important. Then I create the images out of myself, for my knowledge, for my experience, but there is no interaction and there is no decisive moment.
Will artificial intelligence democratize, broaden access to art, or simply dilute the value?
It's a bit more complex. For me, AI is not something that can replace me. It is going to replace a lot of professions for sure. It also creates new professions. And what most people don't see is that you have knowledge, you have skills, you have experience, and you can use it in collaborating with the AI. Then it really is a co-pilot. But I'm the pilot, I'm the director, and I make the decisions. And for me, AI is not something that is above me. I use it as a tool. It's an augmented intelligence.
Really briefly, is there a piece of advice that you give to amateurs, new entrants to the photography world, or even professionals who are worried about the future of their careers, to help them navigate some of the issues that you see coming down the line?
Yes, I think you need to know how AI image generators work. And to the professionals that come to my workshops, I encourage them to use their knowledge and to find their unique way of working with AI. Everything is like undiscovered territory. There is no fixed workflow. There are many options to use AI in your creative workflow. And it's about all of them, you and I, to find out. And I think this is very exciting.
Big, expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders.
Watch Wednesdays on Bloomberg Television.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Rafiq Anadol, thank you so much for joining us. You're an artist, of course. You explore the intersection of technology and computers and art. Could you just talk us through a little bit about your philosophy with that?
Yes, so I'm Rafiq. I'm a media artist, and I use code, data, algorithms
now maybe 14 years, and try to create art with algorithms, data sets, and last 7 years with AI. I am calling this a thinking brush assisted by an AI. When I do art, I also imagine the near future. I hope it's more positive. I hope it's exciting, inspiring, and joyful.
Talk to us about your recent work in Unsupervised. It's at the Museum of Modern Art here in New York, and it was really just breathtaking to see it the moment you walk in. It's 380,000 images from over 180,000 works of art, from Picasso to Van Gogh. I'm curious, what was your initial inspiration? Because just looking at it, it's not like something you can just dream up.
So first of all, I think for any living artist, being at MoMA is a dream. And I'm really grateful for the opportunity to imagine an artwork and a cutting-edge idea in the lobby of MoMA. For me, what was very inspiring is, of course, technology. And of course, how machines, humans, environments are coming together, how the systems, hardware, software is changing every single of our perception of life. So the fundamental idea was, if a machine can learn, can it dream? But when I say dream, I'm not trying to say that trying to mimic reality. I'm not thinking about like reconstructing exact Picasso, Monet, or an artist in the heroes in the collection. But I was trying to think about how can we create an AI that can reconstruct new realities. Artists are always constantly like reinventing the imagination context. But for me, the question was, how can I extend my mind as an artist and use AI as a collaborator? And how can we like imagine the new paintings and sculptures or a new form of art?
It's almost like coding is like the paintbrush. And
exactly. I think it's a great example. It's inventing a new brush and a new pigment and a new canvas at the same time. If one day AI can truly dream, I don't think it will be a dry pigment. It won't be like a frozen moment in time. I feel like it is in flux, in change, like water. I love to represent AI's, decisions in the form of like these fluids.
How do you think about the democratization of art? I mean, the skeptics would say that AI is only going to perhaps make it harder for some of these smaller artists who churn out a lot of art to get a slice of the pie, per se. I mean, do you think that this is going to, put some of the power back in the little guy's hands? But then there is something to be said about the concerns around copyright. How are you thinking about the longer term of who's going to benefit from this versus who's going to not benefit from it?
So, I mean, the most important question is where data comes from. And the data is the answer of all these questions. To me, those data sets are currently used in like conversational AIs or like ready-made text to image, text to video, text to sound current algorithms or systems. It's clear that those are our memories as humanity that we are leaving behind us. So if we agreed on this, which I think clearly what we are doing, right? A comment on a website, an image on a social media, they all become these collective models, collective AI models. The second is, of course, this will change the dynamics of creativity. And I do believe that this will create more opportunities in my mind and what I'm seeing than losing opportunities. I'm seeing many artists, many creators going way efficient in their time and space, reaching new levels of imaginations.
The great thing for me, being such a talentless artist, is that now I can pretend that I know what I'm doing, because I can just type in a bunch of words of things I want to exist and have them exist. So for me, this has been fantastically exciting. Jackie's a little better. I hasten to say that you're a lot better than me.
Even having this conversation about what's good versus what's bad. Art is like so pretentious, and it's really intimidating to walk into a museum and just kind of look at it and know exactly the words to use to critique something that was painted in the 1900s or 1800s. We don't even have a vocabulary, in a way, to describe so many things related to artificial intelligence, emotions, and sentience, for example. How do we start to maybe unpack some of that intimidating aspect Or is AI just going to make it worse given, I mean, I don't think everyday people know how to, code algorithms into art.
So I think it's an incredibly important question, first of all. My role in humanity is, in my view, is create inspiration, create joy, and hope. And to create these three important aspects of life, I found AI is one of the most powerful tools that has, yes, bias in it, but has also the control of creativity or chance and many others. So I think the vocabulary doesn't exist yet, I think. But we are discovering something that has never seen before. And I think what is powerful right now is, as we humanity, we have an access to the tools that can share information instantly. Let's remember Renaissance, for example, right? 1300 to 1600s. I don't believe the people living in Renaissance were aware of they were in Renaissance. But I think right now we have the consciousness and awareness of we are right now in Renaissance.
What would you say your one big prediction for AI is over the next 10 years?
So let's think like this. If one day, if AI decides to decide, right, have a consciousness, and if this AI have its own culture, and if this AI can create art, are we accepting this AI as a being or not? Because fundamentally, answering this being part is really reflects a lot of solutions or problems. So for me, for example, I have an answer for this. I'm happy to invite this AI to our studio, invite the AI as a collaborator, have a seat, and sit together, imagine together. The journey with AI should be similar to finding human in non-human. At least that's what I'm trying to do. Because this really helps me a lot and try to envision what may go wrong and what may help us for humanity.
Nate, after all this, what do you think is more important, the process or the product?
I actually think asking who the creator even is. Because we've talked about creativity. We've talked about art, we've talked about photography. We haven't touched on comedy, drama, poetry, music. These are all creative things that are going to get impacted.
It really does boil down to imagination. Inputting prompts into some of these tools to generate art still takes a good amount of skill. It's a craft you have to get better at. And so maybe in some ways, artificial intelligence is kind of just like another tool, like a 22nd century paintbrush.
I've got a couple of those actually. Here, ready?
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
This is a simple case of where did the money go?
And the technology.
If people wish to invest in it, they must be prepared to lose their money.
I am still very positive on real utility into this space.
Bloomberg Crypto.
items next.
It was going to keep bringing World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
This is my kitchen table and also my filing system. Over much of the past 3 decades, I've been an investor. The highest calling of mankind, I've often thought, was private equity. And then I started interviewing.
While I watch your interviews, I know how to do some interviewing.
I've learned in doing my interviews how leaders make it to the top.
I asked him how much he wanted. He said $250. I said, fine. I didn't negotiate with him, and I did no due diligence.
I have something I'd like to sell, and how they stay there. You don't feel inadequate now because being only the second wealthiest man in the world, is that right? Currently, there are only 2 Fortune 500 companies run by African American women. One of those women is Roz Brewer, who is leading Walgreens Boots Alliance, a well-known pharmacy chain. I sat down with Roz Brewer to talk about how she's trying to transform that company into one that also offers additional healthcare services to its customers. I have noticed that Walgreens and another company that's also in the drugstore area, I won't mention their name, but a competitor of yours, both of you seem to be interested in being in the healthcare business as opposed to the pharmaceutical drugstore business. Why is that? What's so much better about the healthcare business?
So first of all, Walgreens started in 1901. And, when you think about drug dispensing, it's critical to all of us at some point in our lives. But one of the things that's very clear to us, ending the pandemic or in the middle of the pandemic, we realized our relationship with our customers and our patients was so much more critical. We delivered 70 million shots in arms during the time of the pandemic, but the relationship just went to the next level. Pharmacists have always been consultants with customers and patients, and you will see your pharmacist 10 times more than you see your primary care physician. But the idea of having a primary care physician interacting with the pharmacist is the way of the future. And we will need that ecosystem around us.
Okay, so in your case, Walgreens' case, you have begun a business. You've bought a lot of companies in this area that are primary physician companies. In other words,
that's right.
You buy the practices of primary physicians, and then, in effect, those doctors are working for Walgreens, and they are still serving their patients, but they're, in effect, employees of Walgreens. Is that right?
That's correct. So we just purchased Summit Health in the New Jersey, New York area. And now we're one of the largest primary care physician practices in the country.
So primary care physician practice, how many people in the United States of the 330 million people we have or so, how many of them actually have a primary physician?
From what we understand, less than 30% of Americans have a primary care physician.
Okay. And you think it's good to get an annual physical every year? I know you're not a doctor, but...
No, I'm not a doctor. But, I will tell you that, we're all going to be responsible for our health, both financially and managing our own care. And to get a physical every year is a good database for you, a baseline to build for yourself, because it's going to fall back on you. You need to know more about your personal health so that you can interact effectively with your primary care physician.
So I get an annual physical every year. I try to starve myself for the 2 weeks before the annual
Yes,
physical.
I have mine tomorrow. Yes.
I have found it doesn't work, but okay. What do you think the biggest healthcare challenge is for Americans? Is it that we're overweight, we take too many drugs? What is the problem?
So I think it's two-pronged. One is that, yes, obesity is a big problem, but I think it's negligence, but it's not intentional. I think people are confused about the cost and access of healthcare, and they think it's going to cost them a lot. And when people have variable employment, as we've seen across these last several years, is that, they're not quite sure what their insurance will cover and not cover, and what their out-of-pocket expense will be. So they avoid going to the doctor. And I think that is something we've got to bring clarity to, which is why, the digital side of healthcare is going to become very important, so that we can all look at our mobile devices and understand what's going on with their bodies.
COVID brought a lot of people into the drugstores to get their COVID shots, I guess. Has business picked up or gone down since COVID has more or less waned a bit in terms of people getting shots?
What we're seeing at Walgreens is that we created, an expanded relationship. It did start with immunizations, but now people are very deliberate about their flu shots, and so they're still getting COVID shots today, vaccines today, and they're getting flu shots in combination. Our retail business, if you look at our prior earnings, is up and performing well, especially as we transition into healthcare. The front of our stores are picking up.
So I read that post-COVID, it's difficult for companies like yours to get entry-level people to come in. They either don't want to come back into the workforce, or they don't want the job that you can provide them. Is it hard for you to get people? I notice in the stores that I go to, the drugstores, they're always fresh people all the time, new people.
Yes. There's a lot of turnover at the hourly level, I will admit. But as we have these conversations, it's becoming less about pay and more about their lifestyle and what they want to do and progression. And so what we're encouraging is that, work at a Walgreens store and you can become a shift manager and escalate. And that's really what they want to think about as a career and development.
So if you were an entry-level person at one of these stores like Walgreens, what kind of compensation do you get? More above the minimum wage, but you pay like $15 an hour or something like that?
Exactly. And then it moves up based on, shift manager and other responsibilities in the building.
So I've noticed that in a lot of the stores I go into, there used to be younger people, post-college or something, who were the younger people working, servicing the drugstore. Now I see a lot of people who are older, like post-retirement kind of people doing it. Is that a phenomenon you observe?
We see both. On the younger end of the spectrum, it's those looking for development or a fill-in job while they're in college and doing something otherwise in their lives. And then the retirement community is a very, rich environment for us to recruit from.
So I notice in a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we are all part of an organization that's coming together that says if we can put our camera feed together and tell that person has been in our store and their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most, other than razor blades, I guess?
I will tell you, it started at razor blades because that's such a high-ticket item. But, it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe a counter. And so it's just a matter of categories now almost, and not just particular.
So what is the most profitable, high-margin thing that you all sell?
I'd have to say it's in our cosmetics area is one, and then in some of our durable medical goods, some of our take-home testing and things like that are very nice margin items.
What is the most frequent thing that you sell?
Most frequent thing is probably toiletries like toothpaste and personal care items of those types.
And why is it that whenever there is like a scare coming along or a pandemic or something, people rush to buy toilet paper? You notice that? People are they're stockpiling toilet paper.
It's called hoarding, and it's one of those things you never want to be without.
Okay. What's the biggest surprise of being the CEO of Walgreens?
It's how complex healthcare is and how unfortunate it is to try and manage, personal health in the health systems that we've set up in this country.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
You're from Detroit. Your family, how many siblings do you have?
I have 3 sisters and a brother.
Okay, and you're the youngest?
I'm the youngest of 5.
Okay, and are any of the others running drugstore chains?
No, but I do have a sister that's a pharmacist.
Wow, is she at Walgreens or?
No, she's not. No, we don't want to mix.
Okay. So, all right. So, what did your parents do?
So both my parents are deceased, but my parents worked in the auto industry. And so my dad eventually worked as a member of management, and my mom worked in hourly labor at
so you
General Motors.
can go to many good colleges. You went to Spelman, an excellent college in Atlanta. Why did you choose Spelman?
Well, I chose Spelman because, I grew up in Michigan. I wanted to do something a little different, get out of the cold weather. But it was also a chance for me to be at an institution that I thought really reflected me, who I was, and what I wanted to do. And I think also, too, I got a scholarship, and so that was helpful. At the time, there were 4 of us in college. And so I was actually pursuing, support at that time, too.
And what did you major in? What did you want to be?
I majored in chemistry, and I thought, I had always been pretty decent in the math and sciences, so I just did what I knew what to do. And I thought I'd either go into medicine or engineering. And actually, I was recruited away by Kimberly-Clark to work in long-range research as a chemist. So I moved in that direction.
You thought you might go to medical school, but Kimberly-Clark stole you away. Right. Okay. Right. So what did you do for 22 years at Kimberly-Clark?
So I started off in long-range research as a chemist. I was an organic chemist, and I had interned my summers at General Motors. And so I worked in chemistry there. I worked in analytical chemistry, moved into organic, worked in polymer science, and then I worked on one of the businesses. I got a chance to join the M&A team probably about 6 years into my career. And at the time, it was when Kimberly-Clark was converting itself from a paper company to consumer products company. And we acquired several companies, and I got to run one of those companies, and I just stayed on the business side after that.
Okay, so you're doing that. You're there 22 years. You're happy, presumably. And all of a sudden, somebody calls you up and says, how about working for Walmart? What did you say?
No.
No.
On the first call, I said no. Probably the first, second, and third call, I said no. If initially they were speaking to me about a job in human resources, and I really don't have that skill set. And so once an opportunity came about that had P&L to it, I joined the company, and I was group president at Kimberly-Clark, and I took a VP regional job to run the state of Georgia.
Okay. So you're at Walmart, and then somebody calls up and says, how would you like to run Sam's Club? Is that right?
Yes. Well, a lot happened in the first 5 years where I ran Georgia, the Southeast, then the East Coast of Walmart stores. And then I was a candidate for the Sam's Club job.
All right, so you're minding your business. You're running Sam's Club eventually, right?
Right.
You did it for 5 years?
Yes, I did.
Okay, so you're there for 5 years. You're the CEO. It's a pretty good job, I guess. Where you work? Where were you living to do that?
I was in Bentonville, Arkansas.
Okay, you're in Bentonville, and all of a sudden, I guess another headhunter called you up and said, "How would you like to go to Starbucks?" Is that right?
No, actually, I made the decision to leave Walmart stores, and I was on the board of Starbucks, and I had taken the board seat as I was leaving Sam's Club, and so I had attending a board meeting, and Howard Schultz and Kevin Johnson approached me to become the Chief Operating Officer.
But you said you don't really drink coffee, or you didn't say that?
You know, I was a tea drinker at the time, so that was interesting. And Seattle wasn't in my plans, but I fell in love with the brand and the company. I saw a great opportunity to help the company operate a little stronger.
Okay, so you moved from Bentonville to Seattle, and you became the Chief Operating Officer of Starbucks, and Starbucks has become so successful because its coffee is better than other people's coffee, or what is the reason you think it's so successful?
I think it's two things. I think it is definitely quality coffee. It's customized, right, for all drinking palates. I also think that it's their coffee practices along with the baristas in the store. I think the baristas are top-notch and really interact great with the customer.
What's the most popular thing that people ask for when they go to Starbucks? Is it?
Oh gosh, really just a simple pike, which is a black coffee, is still very popular at Starbucks.
Okay.
The cold beverages are really, trending. So.
Okay, so you're there, you're doing that for 4 years.
Yes.
And all of a sudden, I assume a headhunter calls you again?
Yeah, now that was a headhunter.
All right, a headhunter calls you up and says, how would you like to run Walgreens? And you say, I'm happy at Starbucks, or what?
I say, I think about it for a minute, because I was enjoying Starbucks. I wanted to be there, and didn't really think of myself coming back into that level of retail. But it was the pandemic, and there were so many people dying at that point, and people who were adverse to being vaccinated. And I knew for sure, because I follow the science on things, my background is in chemistry, and the science just screamed, that if a vaccine became available, we could curtail this.
But at Starbucks, you have the perfect name for that, brewer, right? So
yes.
Did they ever mention that to you?
I got that all the time. Okay. Everything was what's brewing and all these, yes, hashtag everything.
So
yes.
when you told Howard Schultz you're leaving to go to another company, what did he say?
Actually, I had that conversation with Kevin first. It wasn't pleasant. I think the board was a little surprised, but we made it work.
So do you ever go to Starbucks now?
Every day.
Every day,
yes.
Okay.
Yes.
You ever go to Sam's Club every day still?
Yes, not every day. I bulk up and...
Loyal.
Yes.
Okay. So now, what's the biggest surprise of being the CEO of Walgreens?
I think the biggest surprise to me was how complex healthcare is, and how unfortunate it is to try and manage, personal health in the health systems that we've set up in this country. And it's perplexing. I think that this marketplace is ripe for disruption, and I'm sort of drawn to transformation and disruption. So I became super excited about it once I began to peel back the understanding of the business.
Right. So you're the CEO of a healthcare company, in effect. It does.
Yes.
You have the physician's business, and you also have the pharmaceutical business. What do you do to stay healthy? Because you have to be a role model, right? You can't look like you're not healthy, right? So how do you have to exercise a lot, or what?
Yeah, well, first and foremost, like I said, my health exam is tomorrow morning. I'll be heading back to Chicago to get that done. So I take care of myself in that way. I like supplements, so I take my vitamins daily, and then I will tell you that I work out 3 or 4 times a week as best I can, and so I make it a priority for sure.
I think about working out 3 or 4 times a week,
yes.
but I actually don't do it.
The thing I haven't solved, though, is sleep, and I think that's our biggest opportunity. If I get sleep down, maybe I can lay off of the supplements a little bit.
You're supposed to get 8 hours of sleep a night.
No way.
No, you don't get 8 hours.
No way.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
I think the way they got a date was to impress the females by making loud booms.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
So let me ask you what it feels like to be in your situation. Is it more disappointing or surprising that of all the CEOs in the Fortune 500, there are only 2 female African-American CEOs? Only 2.
Right.
You and the CEO of Teachers is the only other one, I think.
Yes, TIA.
And so are you surprised that at this late date in our history, we only have 2, or disappointed?
Well, I'm more disappointed than I am surprised. I'm not surprised because I know what it took for me to get here, and I know the trials and tribulations that I've been through. And, I'm not quite sure a lot of people would want to withstand that. But I would tell you that the disappointing part is that this is just is totally ridiculous that there's only 2 of us. I think, it's going to go beyond mentoring and sponsoring. It's pipeline, filling the pipeline effectively, getting people of different races in operating roles, and having the confidence that, that they can do it because they absolutely can.
So in your career, what has been a bigger problem, being a female or being African American, or neither?
I would have to say being African American. I think that it is still, an issue in our environment to accept people of different races, more so than it is gender. I think I've seen a lot of progress with women in corporate America, and I'd like to see more progress with people of color.
So as we talk today, you're in Washington, D.C.
Yes.
I presume you're here to meet with government officials to some extent. Do you find that an uplifting experience when you do that?
I find quite a few teachable moments for both of us. I try and bring the real life experience of healthcare to legislation so that when the right decisions are in front of them, they make great decisions.
So what is the principal thing that let's say the drugstore industry would like to have the Congress do?
First and foremost, I would love to see our pharmacists to operate at the top of their license. And so for them to pass legislation that will allow pharmacists to both test and treat so that there's not a second step in, just imagine a mom who has to take a child out of school and take them to pick up a prescription only to find out that the child is still sick and go back to the doctor. So if it's an ear infection, strep throat, we can do a test in the store to figure out and then pass on the prescription, and the recovery period is smoother.
You
and
need
everyone
legislation
goes back.
for that?
We absolutely do, yes.
Okay. And do you meet people from the administration as well, or?
I do. You know, most recently, there's members of Senate that are primary care physicians, and so I know who they are, so I meet with them regularly because they understand us best and help us carry the message, you know, throughout.
So your competitor, principal one, is CVS, I think, probably their largest competitor, some people would say. If CVS is right here and Walgreens is right there, and I could go to either one, why should I go to Walgreens over CVS? I could pick either one. Why are you better than CVS?
So glad you asked me that question. You know, I believe our customer experience model is stronger. I think that when you walk into a Walgreens store, you may not have this happen to you every time, but I think you get a nice greeting from our cashiers, and I think our pharmacists are second to none.
If you walk into a Walgreens today, would they know you?
It depends. If I worked out that morning, no, because they don't recognize me, but sometimes no, sometimes yes. And sometimes I can hear them say that I'm in the store. You know, I can hear them chattering.
So when they say,
Yes.
So you walk into a store though, and if you don't like something, you call the manager and say this isn't good, or do you just kind of tell them when you get back to the office?
So really what I do is I take a picture of it and I send it back to my team at the office and say, I wonder why this is happening, right? Because usually it's a decision we've made that is causing something to happen. 9 times out of 10, it's something we've done versus what the store has done.
So if you need a prescription, do you have to wait in line? Or
I do. I have to wait in line.
You wait in line?
I do.
You ever say, I'm the CEO of this company, I'm waiting in line?
No. Absolutely not, no. But usually there's not too much of a line. So, but I know the best hours to show up too.
Obviously, you've had an incredible career. Did your parents live to see your success?
You know, it's interesting. If I could describe my dad would define my success as what I did in my, throughout my education. My dad was that father that showed up to everything. If I was getting the yellow ribbon and not the gold ribbon, he was still there rooting me on. So he really knew who I was as an individual. You know, we talked about that a lot. He passed away 6 weeks before I finished Spelman, and we had conversations. He saw something in me and he let me know that. So I think he is looking down. I think he kind of knew something good was going to happen. My mom definitely lived through a good part of this. And then my siblings are sharing in, the excitement in our family.
But your siblings, you were the youngest, your siblings say, well, when we were beating you up, we didn't really mean it?
Oh yeah, the days my brother would, yeah, right. The days my brother would throw me across the room, yes. But we're very close now.
Right. And they have to wait in line for prescriptions. They can. So sometimes headhunters have called you and said, would you be interested in this job or that? If a headhunter called you now for another corporate job,
No, I would not. I really, truly think this is the culmination of everything I've done in my life is coming to bear right now. This is what I want to do. We're being very intentional about impacting medically underserved communities. That's important to me.
The top names in climate change are on Bloomberg.
Think about Ukraine right now and Putin's threats to use nuclear weapons, and think about Kim Jong-un just firing all these missiles. And ask yourself, what's the percentage that we're going to have a nuclear war? I think it's in the low single digits. What are the odds that this planet is going to just rebel against what we're doing to it, and the capacity to have food production in Africa, the capacity for water where it is today? That's 100%, folks. Not 1, 10, 15, 20, 50. It's 100% certain that these terrible things are going to happen if we don't do X, Y, and Z. So are we going to get serious or aren't we? We have to start to declare war on the climate crisis, coordinate as if we were in a war, get countries together to help with supply chains. This issue is existential. You know, there's this downside of where we are, but there's also this incredible upside filled with possibilities. The capital markets are already moving in this direction. People are chasing fusion. They're chasing green, blue hydrogen. They're chasing battery storage, water storage, carbon capture, utilization. something's going to break through, because that is what we human beings do.
Nobody covers climate change like Bloomberg, your global business authority.
In Big Ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every couple of years, mega sporting events like the World Cup and the Olympics give us a glimpse into the outer bounds of human performance. Surrounding that spectacle, quite literally, is an entirely different calculus: the decision to even put on the games in the first place. Once a highly sought role, hosting a mega event is now an entirely different proposition, one that politicians, governments, executives, and citizens are asking, is it worth it?
What is the change in tourism during the games and after the games? Controlling for other variables. What is the change in fiscal revenues? What is the change in employment? What is the change in GDP? And so on. We don't see these gains materializing.
There's some big numbers that go around for Qatar's spending on this tournament. I'm worried that the government will be surprised at how many people leave after the event is all over.
I can see why hosting the Olympics and bidding on the Olympics is attractive, but it absolutely comes with enormous long-term risks and costs.
After years of controversy and criticism, mega sporting events could be on the cusp of a new, more sustainable era.
When it comes to organizing the games, there must be a debate, and we've done a lot of reforms over the last decades to make sure that the games remain relevant.
But will the changes be enough to convince potential hosts? One city's example might offer a way forward.
We have the ability to really fit the games to our community, as opposed to have to fit the community to the games.
The first Winter World Cup, held in the compact, affluent state of Qatar, has drawn a massive number of people to the country.
Organizers are expecting some 1.2 million people will come to the country over the course of this month-long event. So you're essentially thinking roughly a 10% increase in population every night in the most busy parts of the tournament. Qatar's also really interested in developing a tourism economy. They've seen the success of Dubai, and even though this is a much more conservative country, they think that they can draw people here for other major sporting events, for conferences, just to visit on stopovers to other places. So they're hoping that some of the new hotels and new entertainment venues and the like that they've built for the World Cup can get used by the next generation of tourists.
Authorities estimate that hosting the World Cup could add as much as $17 billion into its economy. But in order to get to that point, the country has spent a massive amount of money over the past decade on infrastructure, including building an entirely new city.
There are various estimates of how much exactly Qatar has spent in order to prepare for this event. The stadiums are really just a small fraction.
While costs for the 2022 World Cup are reportedly the highest ever for a sporting competition, it's part of an unsettling trend for what are known as mega events.
Mega means big. Other than the day-to-day leagues, the NBA, the NFL, MLB, NHL, or the English Premier League, the day-to-day leagues where they have every couple of days, or if it's baseball, every single day they have a new game, that's standard economic issues. But if it's something where a lot of people are coming from out of town and there's one big event or there's one series of events like the Olympics is 17 days or the World Cup has traditionally been around 28 days, you're doing something special that doesn't normally happen and involves tens of thousands, if not millions of people, then we call that a mega event.
The first International Modern Olympics in 1896, held in Athens, was considered the first sporting mega event, the largest competition ever held up to that time. Although initially limited to male amateur competitors from only 14 countries, the Olympics have expanded significantly in size, scope, and inclusivity since. One key tradition that has persisted for the past century is that the Games travel every 4 years.
Every 2 years we have the Olympic Games and the Winter Olympic Games, which represent what the movement collectively does and bring the best of the sporting world together.
At the helm of the modern games is an organization called the International Olympic Committee, made up of delegates from participating nations. The IOC is responsible for choosing host cities and ensuring that the games are run in accordance with IOC rules.
The movement has evolved tremendously over more than a century. It has gone through many developments as sport in the end reflects society, and to remain relevant, this is a constant adaptation.
For the first half-century or so, the Games were a relatively low-budget affair. But beginning in the 1960s, the IOC and local planning committees began to see value in lucrative sponsorships and global television rights. As the potential rewards grew, so did the scale of the events, along with the cost to build infrastructure to host them. Those costs, however, are not fronted by the IOC. It's up to the host cities, who bid for a chance to reap the potential rewards. But is it worth it?
Somewhere between $4 and $6 billion of revenue will get generated by hosting the Summer Games in these days. On the expense side, it's much, much, much higher. That's not a good financial balance.
Projected costs for an event on an Olympic scale are expectedly high, but the real trouble cities can find themselves facing is when projected costs go substantially over budget, often forcing governments to absorb the overruns.
The University of Oxford in England has done a number of studies on costs and cost overruns. And what they have found is that since 1976, the average cost overrun, or the median cost overrun for the Summer Games, is 252%. So that means 3.52 times the initial bid.
The whole point about these studies is to constantly be aware that organizing an event like this is not a given. It's a constant strive to make sure that the games, when it comes to its economics, do balance.
What drives costs so exceedingly over budget for mega events? Well, it's partly due to optimism bias, in which planners simply assume things will cost less than they ultimately do. Promoters might even intentionally distort initial projections to help win over stakeholders. And by the time the mega event rolls around, there's simply no other option but to spend more.
If the Olympic Games are going to start on July 20th of a particular year, you can't call up and say, oh, gee, we need another 2 weeks. The Olympic Stadium won't be ready on July 20th. No, that can't happen. And so once you have that kind of a very firm, hard deadline in place, now the construction companies know that this has to be top priority, and they have to start shifting workers from other construction projects and shifting materials over there, and that gives them an excuse to bid up the prices still more. So you have all of these factors working together, and all of a sudden you're 2 or 3 or 4 or 5 times higher than the initial bid.
Not surprisingly, enthusiasm for hosting the Games has varied over the years. For a period, the Games seemed cursed. From tragic violence around the 1968 Mexico City and 1972 Munich Summer Games, to a debt-ridden financial disaster in 1976 that Montreal spent the next 30 years paying off. More recently, enormous budget overruns, political controversies, and viral scenes of decaying stadiums in Athens, Rio de Janeiro, and Beijing have led some citizen activists to openly question the environmental impacts, political optics, and cost-benefit ratio of hosting.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Hi, I'm Francine Lacroix. Join me on Leaders with Lacroix as we explore what drives the most influential people on the planet, with guests like U.S. Special Presidential Envoy for Climate Change, John Kerry.
Climate has no affiliation with any party or ideology. Listen to the scientists. This is not a matter of ideology. It's not a matter of politics. That's the challenge.
Leaders with Lacroix on Bloomberg Television, TV Go, and Bloomberg.com.
Boston is an absolutely beautiful city. It looks great in the summertime. It looks great when you envision that helicopter or drone shot looking over a brand new stadium with fireworks going off and our gleaming skyline in the background and the Charles River on one hand and Boston Harbor on the other. It's really an impressive and gorgeous place. It's also on or in the most valuable time zone in the world. The East Coast time zone has something like 40 or 50% of all of the American television viewers.
Boston beats out Los Angeles, San Francisco, and D.C., and will be the U.S. bid in a worldwide battle for the 2024 games.
The polling was very clear that at first, residents of Greater Boston supported the Boston 2024 Olympic bid. The idea of the Olympics improving the public transportation system in Massachusetts was always the most appealing and enticing part. But what became clear is that over time, the more people learned about the implications of the bid, the risks and the costs, that they got beyond those glossy images and saw what it would really mean for their lives and for the future of the state, that people's support for the games dropped dramatically.
We see that the bid requires building the 3 most expensive Olympic venues, that every Olympics since 1960 has gone over budget.
We felt that there needed to be a real debate about whether the Olympics was the right thing for Massachusetts or not. And we saw that because of the power of the people pushing the bid, there were going to be very few institutions that would normally ask tough questions of the bid that were going to do that in this case. And so that opposition had to come from the grassroots, and that's why we formed No Boston Olympics. Boston 2024's original proposal was to put beach volleyball here in Boston Common, not a place that has sand, not a place along the water, and one of the most historic public spaces and important public spaces in the US. This is the original public park in North America. Boston was the first major city to stand up and say no to the summer 2024 games. But in the wake of our decision in Boston, other cities dropped out. Rome, Italy had been talking about bidding. A new mayor was elected there who said she had more important priorities than the Olympics, and so that bid died. Hamburg, Germany actually had a public referendum to bid on the 2024 Games and voted that down in November of 2015. Budapest, Hungary, there was a grassroots opposition to the Games there that forced the question of the Olympics to be on the ballot, and eventually the organizers of the Games there decided not to move forward with it.
In 2017, left with a dwindling set of potential hosts for the 2024 Games, the International Olympic Committee made an unprecedented move. It awarded the two remaining contenders at the same time, Paris for 2024 and Los Angeles for 2028, giving the IOC some extra breathing room and a chance to focus on a series of reforms.
You have to listen to the critics as well. And we've been in contact with them and other opponents to the Games, because this is our mission, to listen and to make sure that their analysis, we do understand why they reach these conclusions and what we can improve.
In the late 1970s, the IOC was in a similarly desperate position, facing backlash after a series of blemished events earlier in the decade. Sensing a rare opportunity for leverage, the city of Los Angeles decided that it could make the 1984 Olympics a success, but on its terms.
What happened in '84 was good for Los Angeles, it turned out, for some very interesting reasons. But it was a disaster because the IOC had to give up on many of its requirements. The IOC requires, for instance, that a host city guarantee that it will carry out all of the tasks in its contract and take full responsibility financially for any costs that are involved. In 1984, because Los Angeles was the only city that was bidding, the IOC basically was on its knees in front of the Los Angeles Committee, saying, please, please do this. And so the Los Angeles Committee dictated terms, and one of the terms was, we're not going to be responsible for cost overruns.
By most accounts, the 1984 Los Angeles Summer Games were a resounding success. Instead of saddling taxpayers with a catastrophic loss, the Games were actually profitable, thanks to strategic corporate sponsorships and manageable costs. Because the metropolitan area already had suitable stadiums, venues, and housing, very little new construction was needed, preventing the sort of surprise expenses that had plagued earlier host cities. And now, amid another challenging period for the Olympics, Los Angeles is again trying to rewrite the narrative.
We like to say that the LA '84 Games are actually what gives us the ability to have such great public support here in Los Angeles for the Games. You can't walk around this city and not meet somebody who has a positive memory of 1984. And that's really the starting place for us. We are a no-build Games, and sometimes we like to say it's a part of our radical reuse philosophy around sustainability. The fact is, the best venues are the ones you don't have to build. Right over my shoulder, you can see one of the main pieces that will actually be the secret sauce of LA being able to host the Olympic Games, and that's UCLA. We have UCLA and USC within really just about 10, 12 miles of each other. And really that's the beginning stages of infrastructure. But beyond that, we really have just an extraordinary number of venues here in LA and in greater Southern California, whether it's 3 facilities, 3 stadiums that are over 75,000 seats, multiple arenas, different types of facilities. And so we're just tailor-made to be able to actually host a mega sporting event like the Olympics and the Paralympics.
As for potential cost overruns, LA 28 has a plan in mind.
We actually are carrying a 10% contingency from day one in our budget in terms of how and what it is that we actually think about. And so we're trying to build against that contingency. I think it's incumbent upon all of us to think about everything that we do and think about it through the lens of sustainability. We'll have probably just shy of 100,000 jobs that will be a part of our journey over the next 6 years, and that's billions of dollars of economic impact directly to citizens of LA.
Beyond the raw cost-benefit figures, there is another value to the Olympics that is harder to measure.
For us, it's really about human legacy, and it starts actually with the kids that we want to be sitting in the stadiums thinking and dreaming that they too can be an Olympian or a Paralympian. As a part of our Play LA program, which is our $160 million investment into kids in Los Angeles, one of the real important parts of that is we've introduced adaptive sports into the Rex and Park program in the city of LA.
I'm optimistic about the 28 games for the same reasons. I think that they have really excellent management of the organizing committee, and they're Los Angeles. We've got a lot more stadiums now than they had back in 1984, and they've got more infrastructure, including public transportation, that they didn't have. So I think it'll turn out well.
multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg TV and radio. Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Meanwhile, at the other end of the spectrum, there are places where costs simply aren't a major concern. But this path comes with its own set of problems.
The person who really seems to have wanted to host the World Cup more than anyone else is Sheikh Hamad bin Khalifa Al Thani. He's now known as the Father Emir. He was the former ruler of Qatar. And this was really his desire, not just to host, a massive football tournament. He knew that it would drive an enormous amount of development in the country, that Qatar really needed to become a kind of modern place.
And that's exactly what happened. In the last decade alone, Qatar has built more roads, bicycle paths, and bridges than during the entire previous half-century. Funded by a robust petroleum and natural gas-based economy, the government was less concerned with short-term profit and more interested in the long-term benefits of future tourism, business development, and global prestige. For instance, they've gone to great lengths and no doubt expense to show off cutting-edge engineering feats, such as this innovative stadium design constructed partly out of shipping containers, meant to be easily deconstructed and transported elsewhere. But the attention the nation has received has generally not been so positive.
Behind the scenes, many more are being exploited, unpaid, forced labor, badly treated.
It's very hard to give an exact figure. I would suspect it's actually in the hundreds. I think hundreds of workers have died to make this World Cup possible.
There was initially reports about the deaths of workers in stadium projects and other projects directly tied to the World Cup. This obviously set off an enormous international outcry, and ultimately the government did start making reforms in order to respond to this. So people were living in very cramped, unsafe, unsanitary accommodations. They've set minimum standards on that. They also introduced a universal minimum wage, meaning it applies to people of all nationalities. It's not much, it's about $274 a month, but it's something, and in fact it's the first universal minimum wage across the Gulf region generally. Activists are not entirely happy with the reforms that Qatari government has made. They don't believe that some of these reforms have gone far enough. On worker deaths, for instance, nobody really had bothered to count for a long time how many workplace deaths and injuries you had across the country. Activists are very concerned about what happens after everyone goes home. I think these are questions we don't know the answer to.
Qatar's hope is that in the long run, memories of compelling matches will outlast any lingering controversy. The 2022 World Cup story echoes other mega events in recent years, where strong centralized governments have spent lavishly to help build global prestige, only to find themselves marred by controversy.
If you look, for example, at the 2022 Winter Olympic bidding process, all of the democracies that were bidding in that process actually dropped out before the final bidding phase. The only two cities that were left were Beijing, China, and Almaty, Kazakhstan, both autocratic countries where there's no democracy, there's no input, there's no opportunity for residents to push back against the extravagance of the games.
Russia received a 4-year ban for doping from the World Anti-Doping Agency.
China has been criticized by some countries and human rights groups over what they say is abuse against Uyghur Muslims.
They're going to be under increasing pressures from corporate sponsors. They're creating all sorts of problems in terms of how the labor force is treated, in terms of environmental destruction, and so on. So corporations are sort of pulling back, or they're saying, well, if you expect us to stay around, you've got to clean this stuff up.
Mounting public concerns from citizens, cities, and sponsors over the recent spate of controversial games have forced organizing bodies like FIFA and the IOC to pursue reforms. One approach to address the sustainability concern has been to spread out mega events over a region or even a continent, instead of forcing a single city to take on the burden.
I think FIFA has an easier job only because there are more places that have the necessary venues and infrastructure. And because of the very profound and lasting and pervasive popularity of soccer, they have more leeway, I think, than the IOC. So hopefully we'll see some good changes there.
In fact, things are already looking differently in the next World Cup, which will be spread out in 16 cities across North America and rely mostly on existing infrastructure.
The World Cup is coming back to Boston in 2026, and it never crossed our minds to create a no Boston World Cup group because the costs are just going to be a small fraction of what hosting the Olympics would have been.
As for the Olympics, the IOC has spent the past decade reflecting on its complex legacy and outlining broad new reforms aimed at reinventing the Games for the sustainability-conscious 21st century.
Listen, the most important was a decade ago when we adopted a motto that a city does not adapt to the games, but the games adapt to a city. Then the second thing which was important is we don't build if it's not absolutely needed. We have a sustainability agenda that is very appealing as well. We'll be climate positive as a rule from 2030, but already Paris 2024 will be climate positive, which is a great objective to reach. I think everybody also is recognizing the efforts when it comes to sustainability and the whole agenda, economic, social, and environmental. Yes, it's more to deliver for the organizers, but for the better. The successful Olympics is one that, first and foremost, brings back to the community what they were expecting.
Even the bidding process, once a fierce competition that often encouraged the sort of wild promises that led to financial pitfalls, has been reshaped.
It is a partnership now. So we have cities that come to us and say, listen, what does it take if I want to organize the games in 2040? And the big difference is that the IOC is not judging anymore the quality of a given value proposition. It is contributing to it.
The plans for upcoming games, Los Angeles in 2028, Milan in 2030, and Brisbane in 2032, already seem to be heeding the warning signs of the past. So far, at least. But some critics have proposed an even more radical concept.
What I would favor in the long run, what I think is most rational, particularly in these days of climate change and the need to conserve resources and not waste resources, is we ought to have one city that hosts the games permanently.
Having everyone agree on a single host city might be a challenging diplomatic problem. Regardless, the institutional reforms within the World Cup and the Olympics demonstrate that mega sporting events can respond to the demands of an ever-evolving planet. And the days of massive cost overruns and wasteful infrastructure may be behind us.
I think there are much more sensible ways to proceed. Whether the world decides to be sensible or not, I think, is still an undecided question.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's for the Fed to respond to it, and this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.